So guys, we did the concept of asset and liability the other day. I told you that asset is a resource which is within the control of the entity and is expected to give us future economic benefits. For you to recognize an asset in the books of accounts, there should be two conditions. The first one, beta, is that you should be able to measure the cost. The other condition, beta, is it is probable that there will be inflow of economic benefits. Only then asset can be recognized in the books of accounts. And then beta, initial measurement of any asset will always be at cost. Subsequent measurement of an asset will depend on whether the economic benefits will be derived by selling the asset or by holding the asset. If your objective is to sell the asset, guys, then cost or market value NRV, whichever is lower. If your objective is to hold the asset, guys, then prima facie asset will be valued at cost. After that, what I said, what's a liability? Liability is an obligation. Present obligation arising on account of a past event, the settlement of which is expected to result in outflow of economic resource. Now, provision is nothing but a liability which requires a substantial degree of estimation. Are we all clear about that? Yes or no, kids? The next part that we are going to do, beta, is the applicability of accounting standards. I will talk about revenue recognition norm also, beta, later when I do AS9, because I will have to cover a lot of cases. So before that, beta, we have applicability of accounting standards. Do we all know what are accounting standards? Raju says yes. Yes, beta, Raju, what are accounting standards? That was no. Acha. Nehal, you also said yes. So what are accounting standards, Nehal? I do not want textbook definition, beta. जो समझ में आता है बस वही बोलो, हाँ. On the basis of which the accounting treatments are based on these standards. So these standards give us accounting principles. Huh? Piche dekh. Shabaz. Yes, beta. What are accounting standards? While yes, beta. While we perform the task of accounting, Shabaz says that you're supposed to follow accounting standards. This is a type of. They are the rules that we are supposed to follow. They say we are not supposed to talk in the class. Is that a rule? No. Yes or no, sir? Yes. Anyone else, guys? What are accounting standards? Some serious answers, guys, now. He says that these are rules that we are supposed to follow while we perform the task of accounting. Anyone else? Tane? On the basis of which accounting is done are, oh my god, yes, guys. On the basis of which accounting is done are called as your accounting standards. Alright, guys. If you do not have a set of specified rules, accounting principles, then everyone as such beta would end up, perform the task of accounting in their own way. Imagine, guys, that Tane buys inventory as such, guys, at an amount of 100 rupees. He first starts a business with a capital of 100. So his balance sheet mein beta, there is capital of 100 and then there is a cash balance of 100 rupees. He uses this 100 rupees to buy inventory worth 100. But because it is his business as such, guys, his inventory was never sold. He decides to revalue the inventory. He's like, nah, this inventory has a market value of 10,000 rupees. Though he's purchased the inventory at only 100 rupees. So he decides to show his capital balance with at 100 and then disclose that is already made a profit of 9,900. Can he do this? Why? We have learned an accounting principle that inventory should always be valued at cost or NRV, whichever is lower. And why do we have to value inventories at cost or NRV, whichever is lower? We have learned about the concept of conservatism, sir, that you're not supposed to record unrealized gains. Is this an unrealized gain? Now, so all of these principles are what are specified in your accounting standards. If you do not have accounting standards as such, guys, then people will end up accounting in the way that they want to. Even now, there are few things that are not covered by accounting standards and people follow their own treatments because it is not covered by an accounting standard. If you are auditing the financial statements of any company as such, but any organization, and they follow their own accounting and you do not agree to it, they will ask you only one thing: is it provided for under any accounting standard? If yes, show it, we will follow it. If it is not provided for under any accounting standard, we will do whatever we want to. So we need accounting standards to ensure that the financial statements are reliable. If accounting standards are not followed, obviously beta, your financial statements will not be reliable. Work out. If sit here straight, the class starts at what time, guys? So if accounting standards as such, guys, are not given, are not specified, then people will end up following whatever accounting policies as such, guys, and then the financial statements will not be reliable. If this idiot here beta states that he has made a profit of 9,900 rupees beta, will these financial statements be reliable? No, not at all as such, guys, because you know that he never made a profit of 9,900. Likewise, what if I buy a fixed asset as such, guys, at 10,000 rupees, but then the market value of that has increased to 1 crore. So I start recording the fixed asset at 1 crore and then disclose a profit of 99.9 lakhs. Will that be correct? Again, incorrect. Yes or no? So again, this is the reason why we need accounting standards, to ensure that your financial statements are reliable. The other reason why we need accounting standards beta is that you should be able to compare the financial statement of one company with the financial statement of an other company. If today Jio is reporting a profit of say beta 4,000 crore rupees, Bharti Airtel is reporting a profit of 5,000 crore rupees. And what if both of them end up following two different set of accounting policies altogether? Will those financial statements be comparable? Even now we have multiple options given under accounting standards. Not like there's only one option given, but then there will be a disclosure made clearly that this is the option given under accounting standard. We have followed this option. जैसे आगे जाके fixed assets में पढ़ेंगे that there are two options given. You can either follow cost model or you can follow revaluation model. Organizations will clearly disclose that under notes to accounts. Is the organization following cost model or is the organization following revaluation model? We will see that in inventories chapter. We can follow FIFO method or we can follow weighted average method. Organizations will again make it very clear in the books of accounts, but are notes to accounts, that they're either following FIFO method or they're following weighted average. Abhi bhi options hai. It is not that there is only one set of accounting principle applicable to all the entities and they have to follow only that. But at least there's disclosures are made, and based on those disclosures, you will be able to compare the financial statements of one entity with the financial statements of an other entity. Are you getting the point? This is the basic reason why we need accounting standards. Are we clear? Every accounting standard beta will cover certain aspects. They will talk about recognition. Did I talk about recognition criteria the other day? For what aspect, for which item beta did we talk about the recognition criteria? What is the asset recognition criteria? You will have this aspect in every accounting standard that deals with valuation of assets or that deals with revenue recognition. Just revenue recognition mein beta, it will tell us that you can recognize revenue only when the risk and rewards of ownership are transferred. That is the recognition criteria. If that is not specified, we will not know when to book revenue. We will not know when to recognize an asset in the books of accounts. Asset recognition criteria wohi tha beta that we have discussed, that you should be able to measure cost and it is probable that there will be inflow of economic benefits. This should be clearly given in the standard. Only then you will know when are we supposed to recognize a particular item. After recognition, next comes beta measurement. Measurement kya hai? Did I talk about measurement yesterday? Initial measurement of any asset is always at subsequent measurement of an asset, I told you, will depend on the way that you're deriving economic benefits. कहाँ पे सीखेंगे बेटा ये सब? Do you think this will be provided for under the standard itself? जैसे inventories में बेटा, they will tell us that initially बेटा we value inventories at cost. On balance sheet date, we should value inventories at cost or NRV, whichever is lower. Fixed assets will tell us that on balance sheet date, we can either follow cost model or we can follow revaluation model. This will again be given under an accounting standard. Presentation. How are we supposed to disclose that on the face of balance sheet or on the face of P&L statement? When I say on the face of balance sheet, beta, balance sheet mein you will see multiple line items. We will cover schedule 3 financial statements later. So how are we supposed to present that on the face of balance sheet? How are we supposed to present it on the face of P&L statement. And then finally disclosure. Are there any additional information required that is to be given under notes to accounts? Not everything can be stated on the face of balance sheet. Can we state everything but on the face of balance sheet? अब जैसे ये notes to we will show all of this. This is the face of balance sheet. A face of balance sheet mein beta you will have fixed assets, tangible assets, intangible assets. But is there a compulsion that you have only one tangible asset? Where do I give all of that information? Under notes to accounts beta I will have all the details given. जैसे अभी say for example fixed assets are stated at cost of acquisition and all of that. मतलब how are they recording for fixed asset inventories I guess so that you can compare. Inventories are valued at lower of cost and NRV. They're using weighted average method for valuation of inventories. So all of these disclosures will be given under notes to accounts. 1 second. अब जैसे tangible assets guys. These are all the tangible assets that they have. They have buildings, they have plant and machinery, furniture and fixtures, vehicles, office equipment and everything. So you cannot give all of this details on the face of balance sheet or on the face of P&L statement. All of these disclosures can be given only under notes to accounts. So every accounting standard will majorly cover these aspects. It will talk about recognition, it will talk about measurement, presentation and disclosure. There are few accounting standards that only talk about disclosure requirements. They do not deal with measurement, they do not deal with recognition. There should be some, जैसे if there are transactions with related parties. Related party matlab what if guys I end up paying salary to my dad, what if I end up paying salary as beta to my brother from RCA, will that be a related party transaction? So there will be additional disclosures that are required guys for related party. I am not changing anything that is being reported in balance sheet, I am not changing anything that is being reported in P&L statement. I am only changing I am only presenting additional information under notes to account so that whoever is reading financial statements will know that there are related party transactions. Don't you think related party transactions can have an impact on profitability? Many family owned businesses guys will have every family member as a director or as an employee of the company. Okay? And they will give huge amount of salaries to them. That is their way of saving taxes. But then if it's a listed entity, do not forget that is indirectly siphoning money. If it's a listed entity and you're paying huge amount of salaries to your own family people, are you not indirectly diverting funds? But then वो कुछ तो दिखाने के लिए दिखाते बेटा. जैसे in one case, the daughter-in-law was an interior designer. She was made product developer. Like she has an expertise in designing. कहाँ interior designing यार, कहाँ product development? But then the amount of salary that was payable to her every year was 11 crore rupees. But that is their way of, as such guys, diverting funds from the organization. But when you read the financial statements and all the disclosures given under that, won't you have a better analysis of the performance of the company? So that is why there will be few standards that only talk about. We have another standard beta called as segment reporting. Is there a compulsion that one company should only be engaged in one business? Can they have multiple businesses? Reliance Industries guys, if you look at the financial statements directly, you will not know what is the revenue from petrochemical business, you will not know what is the revenue from retail, you will not know what is the revenue from telecommunication business. But as an investor, are you not interested in all the information? Where will you give all of this? Notes to accounts. So that is again only a standard that deals with disclosure requirement. It does not deal with recognition, it does not deal with measurement. Few standards deal with all the aspects. There are few standards that will only deal with disclosure. Are we very clear about this? Just say we have earnings per share. There's a standard that covers earnings per share. That's only a presentation and disclosure standard. That will tell us where are you supposed to present on the face of P&L and what are the disclosures to be given under notes to accounts. Are we very clear about this? So wherever we talk about an accounting standard, you will majorly see only these four aspects coming into picture. Recognition, measurement, presentation and disclosure. Are we very clear about this? Now, Shabazz said that accounting standards are rules to be followed. Correct, sir? So if you start a business today, is it mandatory for you to follow accounting standards? Yes. Who is telling you that you are supposed to follow? Your CA is telling you that you're supposed to follow accounting standards. Who's telling that CA? ICAI. So ICAI has power over you. Correct? So if Tane is not a CA student, he has no relation to any CA. Let us assume that. And he does this. He's buying an inventory at 100 rupees, he's recording it at 10,000 rupees, he's reporting a profit of how much? 9,900. According to you, is he violating a rule? Yes or no? So, should we imprison him? So your personal opinions later, guys. But should we imprison him? No. Should we levy a penalty? Yes. How much? Depend upon the quantum of. Huh? Should we levy a penalty? The answer is yes. How much penalty should we levy on him for not following accounting standards? 9,000? Yes, guys. He says that we should levy a penalty of 9,900 rupees on Tane because he has reported a profit of 9,900. Is there any other answer, guys? Lakshita? Huh? Chanchal? Doesn't matter, beta. शाबाश क्या बुलाता है देखो. बोल चंचल. Reasonable amount. Oh my god. Guys, foundation kids, did I teach all of this in foundation? Applicability of standards, whether standards are mandatory or not. You were not my account students in foundation, but others. Alright, guys. We have experts here. Devyani. Jaldi bolo yaar, time pass mat karo. No idea. See, guys. You said these are rules to be followed. First, I told you what is the objective of accounting standard. Crystal clear, right? Without accounting standards, financial statements will not be reliable. Financial statements cannot be compared with other organizations. What do accounting standards cover? I just told you that they cover 4 aspects. How are we supposed to recognize an asset? How are we supposed to recognize a liability or a revenue or an expenditure? How are we supposed to present that? How are we supposed to measure it? How are we supposed to disclose it under notes to accounts? All of these aspects are covered by accounting standards. Then you said that these are compulsory, mandatory rules to be followed. My question is, if you do not follow these rules, what will happen? They say that you are not supposed to ride a bike without wearing a helmet, correct? वो बोलते सर, अपन थोड़ी फॉलो करते हैं. अपन चश्मा लगा के सुबह अलग ही जोश में आते हैं. अपन को लगता है अपन शाहिद कपूर है. वो कौन सी मूवी है बेटा वो? कबीर सिंह. हाँ सर, हाँ. अपन वो जोश में रहते हैं. But if you do not wear a helmet, is there a penalty? Yes. Who's levying that penalty? Correct. Government is levying through different acts that are passed. There is a traffic violation act or whatever is that act called as such, but based on that, they can levy penalty. Yes or no? Where is it given in any act of government that you are supposed to follow accounting standards? Are you trying to get the point now? If I say that these are rules to be followed and there will be a penalty or there will be imprisonment, shouldn't it be provided under some act, some rule? There should be a law related to accounting standards that is telling us that boss, you are supposed to follow this, otherwise you will be imprisoned. Are we clear? Can you walk into any shop, beta? तुम लोग break में बंडी पे जाते चाय पीने or other activities along with that. Can you ask them, do you follow accounting standards? खींच के लगाएगी वो आंटी? Yes or no, guys? She'll be like, चाय पीने आया है, दूसरा पीने नहीं आया है, चुपचाप निकल बोल के यहाँ से. Can you ask them better? No. Are we understanding this? For that matter, guys, even RCA does not follow accounting standards to the entire extent. We do follow, but only to a certain extent. Can you impose a penalty? If yes, you will ask me, sir, what is a quantum? They say revenue recognition, guys, we do not go by accrual basis, we go by cash basis. Allowed. Because we are preparing books of accounts only for the purpose of taxes. Taxes says cash system is allowed. You do not have to follow accrual system. I am not violating anything there. But accounting standards are not allowed. AS 9 says that compulsory revenue recognition should be on accrual basis. It cannot be on cash basis. Fundamental accounting assumptions, guys. Kabhi padhe? Going concern, consistency and accrual. Isn't accrual a fundamental accounting assumption? We do not follow. Kya karenge abhi? We are not following accounting standards, right? Yes, beta. Swani. No idea. That's a better answer. Anyone else, guys? Latecomers. नाम भूल गया यार तेरा. अंश. हाँ. Depends on the type of organization. Excellent बेटा. गलत जवाब बेटा. काम excellent बोल के आंसर बिगाड़ दिया पूरा. So you're telling me that yes, RCA is a smaller organization. That is why they can get away with it. Is that the comparison? Huh? Excellent answer, guys. So accounting standards key applicability. I think I spoke about this in CA Foundation, guys. I was expecting you to answer all of this, but anyways, the applicability of accounting standards depends on the type of organization. If you are registered as a company, there is a legislation that governs company. What is that act called as? Companies Act 2013. Anything that is given under Companies Act will obviously be applicable to all the companies. Yes or no? Are they supposed to follow that? Undoubtedly, yes. There is a section under Companies Act, but a section 129 that says that it is mandatory for all the organizations to present their financial statements in the format given under Schedule 3 and based on the accounting standards that are prescribed under section 133. Meaning there is something given under Companies Act that makes it mandatory for you to follow accounting standards. So if you are registered in the form of a company, it doesn't matter what business are you doing, whether you are a smaller organization, whether you are a larger organization. Accounting standards prima facie are applicable if you are registered in the form of a company. It doesn't matter even if your organization is a non-profit organization. Whether it's a profit-making organization, whether it's a non-profit-making organization, does not matter. You will have to follow accounting standards. Many larger organizations, beta, have their NPOs, non-profit organizations. But they are registered in the form of a company only. Because they are registered in the form of a company, they will have to follow accounting standards. Are we clear? But when it comes to other forms of organization, just let us talk about a partnership firm. He said correct, RCA is a partnership firm. So if I talk about a partnership firm, guys, what is the act that governs partnership? Indian Partnership Act. So correct, guys. So the Indian Partnership Act as such, beta, does not specify anywhere in the entire act that the books of accounts that are being maintained should be in compliance with accounting standards. It is not given anywhere in the entire act that you will have to follow accounting standards in the preparation of your books of accounts, which means accounting standards are not applicable. Are you getting it, guys? Even for a sole proprietor के लिए तो कुछ act ही नहीं है, ठीक है? For a sole proprietor, there is no separate act as such, guys, anywhere. So there is nothing that is again specifying better that they will have to follow accounting standards. So accounting standards are mandatory, but only for a company form of organization. For other forms of organization like a partnership firm or a sole proprietor, guys, accounting standards are not mandatory. Which means if Tane is starting a business as a sole proprietor, he buys an inventory for 100 rupees, he reports that inventory at 10,000 and is showing a profit of 9,900. Pagal hai, kuch bhi karega. Who cares about it? Can you levy a penalty on him? No, you cannot levy a penalty. Can you imprison him for this? No. 9,900 penalty is not applicable here. Are we clear about this? Yes or no, guys? Can RCA not follow accounting standard 9 revenue recognition? Yes, because accounting standards are not mandatory for. But there is a catch here. ICAI is a regulatory body. ICAI किसको govern करता है बेटा? Only chartered accountants, CAs. It does not have regulatory power over any form of organization. ICAI cannot walk into any shop as such, beta, Tane's shop, and say, we want to check whether you're following accounting standards or not. That power is not given. It only has power over chartered accountants. It has indirectly made accounting standards applicable. It says that a CA in practice can attest, sign financial statements if and only if they are in compliance with accounting standards. That means if RCA wants to get their financial statements audited by a chartered accountant, Obviously, I cannot sign my own financial statements. If I want to get my financial statements audited by a CA for whatever purpose, the CA will have to ensure that the financial statements that we are presenting are in compliance with accounting standards. Otherwise, he is not supposed to sign those financial statements. He cannot give an opinion on those financial statements that these financial statements represent a true and fair view. Okay? That opinion can be given only if they are in compliance with accounting standards. Are you trying to get the point, beta? Why will a partnership firm or a sole proprietor want to get their financial statements audited? It can be for any purpose, beta. Most likely it will be for the purpose of a bank loan. You approach a banker for a loan, beta. The banker will tell us that please submit audited financial statements. We do not trust the financial statements that you are giving us. Yes or no? वरना कोई भी खदा बेटा कुछ भी रिपोर्ट करके दे देगा ना बैंकर को. हाँ. Imagine beta that is reporting a profit of 9,900 and submitting it to the banker and then takes a loan and then runs away as such, guys. Possible or not? The bankers will insist on audited financial statements. This is where indirectly the accounting standards become applicable. If I do not want to get my financial statements audited, guys, do I have to follow accounting standards? No. For the purpose of taxes, I have to get my financial statements audited, but that is tax audit. There, beta, CA is supposed to check whether we are complying with provisions of income tax or not. That's it. He doesn't have to check whether we are complying with. So, am I complying with the provisions of income tax? The answer is yes, because cash system is allowed under income tax. I am not violating anything. समझ में आ रहा है नहीं आ रहा? If it is merely for the purpose of tax audit, then you only follow whatever are the provisions given under income tax. You do not have to worry about accounting standards. But what if, guys, today I get into partnership with an unrelated person? What if here beta me and Tane get into a partnership? They might not be 100% trust here as such, guys. So we will both insist on a mandatory principle that we should get our financial statements audited at the end of every year. अब जैसे building association रहता बेटा, it is not registered in the form of a company. If it is not registered in the form of a company as such, guys, there will not be any. Accounting standards are not mandatory, but in spite of that, beta, they get their financial statements audited. Because not every resident will have trust over the other resident. They'll say, get the financial statement certified by a chartered accountant. So this becomes the indirect application. Are we clear about this? So what do we understand better from this discussion? First, whenever you talk about the applicability of accounting standards, check what is the form of organization. If it is a company, accounting standards are mandatory. पानी की bottle गिरी है बेटा, बंदा नहीं गिरा है. यहाँ पे देखो. If it is registered in the form of a company, accounting standards are mandatory. If it is not registered in the form of a company, accounting standards are not mandatory. However, if other forms of organizations have to get their financial statements audited, it is mandatory for the CA who's attesting those financial statements to check if accounting standards are being followed or not. But under this also there's another point. When accounting standard rules were rolled out, there are accounting standards rule which ICAI has rolled out as better. So when the rules were rolled out, they made reference to commercial industrial undertakings, business undertakings. Commercial, industrial and business undertakings. That means if there is 100% charitable or a religious organization, you have 100% charitable or a religious organization. If these entities want to get their financial statements certified, accounting standards are not mandatory. Even if a CA has to sign those financial statements. But 100% of their activity beta should be of a charitable or a religious nature. Even if a minor part of their income is coming from business, profit making entity as such beta, then accounting standards will become mandatory. यहाँ पे ना बेटा बहुत बड़ा वो रहता, because a lot of charitable organizations will have fixed deposits with bank. They will earn income on fixed deposits. Or if you talk about Secunderabad Club beta, is it a profit making organization or a non-profit making? Non-profit making. The objective is not to make profit, the objective is to service all the members. But then once in a while beta, they conduct these Christmas ball as such beta or Navratri nights where outsiders are also allowed. They sell passes, they make money out of it. So there is some element of profit making activity coming into picture. So if there is some profit making element coming, even if it is a minute part, 0.001%, accounting standards will become mandatory. समझ में आ रहा है? So what do you check beta is first whether it's a, If it's a company, guys, it does not matter even if it's a non-profit organization. Because Companies Act में it is clearly given that you're supposed to follow. Even non-profit organizations will have to follow accounting standards, mandatory. For other forms of organization, only if they have to get their financial statements attested, audited. इसमें भी मैं क्या बोला बेटा? If it's a 100% charitable or a religious institution, not mandatory even if you have to get the financial statements audited. Other than 100% charitable or religious organizations, beta, it is mandatory for you to follow accounting standards if you have to get your financial statements audited. Are we clear about this? A majority of your business undertakings, beta, family businesses, if they're not in the form of a company, you get your financial statements audited only for tax purpose. You do not get your financial statements audited for any other purpose. So you will not follow any accounting standard. You will only follow whatever is given under Income Tax Act. Are we crystal clear about this? ये सब exam में questions में आते बेटा. They're asking all of this as a 2-marker question, MCQ also. So are we clear about all of this? Any doubt in this part? लिखो बेटा heading. Applicability of accounting standards. Write the heading, guys. Sir, we should only follow the standards if you are getting our accounts audited. Yes, but Karunya, I'm so sorry. I just read the answer now. I did not look at the screen. So Karunya answered correct thing, but long back. क्या बोल रहा था बेटा मैं? Heading applicability of accounting standards. Applicability of accounting standards. Heading लिख लिए? Write down. Accounting standards are written policy documentation. Accounting standards are written policy documents. क्या लिखे इसके पहले? Written policy documents which cover the accounting principles which cover the accounting principles to be followed in preparation and presentation of financial statements. In preparation and presentation of financial statements. Next line. If such principles are not specified, the financial statements will not be reliable. Financial statements will not be reliable. Next line. Example. Valuing inventories at cost or NRV. Valuing inventories at cost or NRV, whichever is lower. Valuing inventories at cost or NRV, whichever is lower, is specified under AS2. Valuing inventories at cost or NRV, whichever is lower, is specified under AS2. If inventories are directly valued at market price, if inventories are directly valued at market price, if inventories are directly valued at market price, profits will be under or overstated. Profits will be under or overstated. Profits will be under or overstated. ठीक है बेटा. Next. Every accounting standard covers aspects of recognition, measurement, presentation and disclosure. Recognition, measurement, presentation and disclosure. Next beta. Next line. The mandatory status of accounting standards. The mandatory status of accounting standards depends on the form of organization. Mandatory status of accounting standards depends on the form of organization. Section 129 of Companies Act 2013. Section 129 of Companies Act 2013 makes it mandatory. Section 129 of Companies Act 2013 makes it mandatory for every company. To present financial statements which are in compliance with accounting standards, specified under section 133, which are in compliance with accounting standards specified under section 133. Hence, every company, irrespective of the nature of activities, is required to follow accounting standards. Next line. For other forms of organization, that is partnership, sole proprietorship. For other forms of organization, that is partnership, sole proprietorship. There is no specific legislation. no specific legislation which requires compliance with accounting standards, which requires compliance with accounting standards, compliance with accounting standards. However, ICAI requires every member, ICAI requires every member, ICAI requires every member to attest financial statements, attest, ATTEST, attest financial statements only if, attest financial statements only if they are in compliance with accounting standards, only if they are in compliance with accounting standards, they are in compliance with accounting standards, accounting standards. Hence, other forms of hello. Hence, other forms of organization, other forms of organization. Hello. Will have to follow accounting standards. One second, guys. Hello. Online students, I hope you're able to hear better back. Yes, guys, what is the last sentence that we wrote? Hence, other forms of organization will have to follow accounting standards if if the financial statements are to be attested, if the financial statements are to be attested, if the financial statements are to be attested. Next line. As per the accounting standard rules of ICAI, as per the accounting standard rules of ICAI, as per the accounting standard rules of ICAI, accounting standard rules of ICAI, accounting standards are only applicable to, accounting standards are only applicable to, accounting standards are only applicable to industrial, commercial, or business undertakings. Industrial, commercial, or business undertakings. Industrial, commercial, or business undertakings. Business undertakings. 100%, 100% charitable or a religious organization, a 100% charitable or a religious organization, 100% charitable or a religious organization need not comply with accounting standards, need not comply with accounting standards, need not comply with accounting standards, even if the financial statements are required to be attested, even if the financial statements are required to be attested. Even if the financial statements are required to be attested. This exemption will not apply. This exemption will not apply. This exemption will not apply if even a small part of even a small part of even if even a small part of the activity is of a commercial nature. Small part of the activity is of a commercial nature. Is of a commercial nature. अभी ये लिख लो बेटा. Organization summary इसका. What is that? If it is a company, accounting standards are mandatory, applicable to non-profit organizations also. Non-profit organizations but are called as Section 8 company under Companies Act. For other forms of organization, if it's 100% charitable or a religious organization, then are they mandatory or no? Not mandatory. Even if financial statements are to be attested. Company beta, accounting standards are mandatory, applicable to non-profit also. Oh my god. Applicable to non-profit organizations also. Other forms of organization, if it's 100% charitable or a religious organization, guys, not mandatory even if financial statements are to be attested. Other than charitable or religious organization, mandatory if financial statements are to be attested. For a company, accounting standards are mandatory, guys. For other forms of organization, if it's 100% charitable or a religious organization, not mandatory. Other than charitable or religious organization, mandatory if financial statements are to be attested. Yes, बेटा. क्या 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 you do not you audit better, but then you do not have to worry about applying accrual concept and other accounting principles. Whatever accounting policies that they're following, based on that only. A lot of organizations will directly go on cash basis. So based on that, you're still verifying the records. There is no, whatever principles that they are following, they have to follow that consistently anyways. They do not have to worry about what is exactly given under accounting standards. Because a non-profit organization, there will not be any payment of dividend or anything of that sort. No one is withdrawing money. Whatever money that they make are being used for their own activities only. If non-profit organizations is getting, now interest income, rental income ke liye beta, there is still an exemption given. We do not have to go deep into that part, but then what is the objective of generating that rental income is important. A lot of non-profit organizations generate a huge amount of corpus. They put that money in fixed income securities or in generating rental income. Using that interest income and rental income, they will keep serving. So the objective of making that investment was to ensure that you generate sufficient money year after year. अब बिल्डिंग मेंटेनेंस वालों के लिए भी बेटा, एवरी बिल्डिंग मेंटेनेंस विल हैव अ फिक्स्ड डिपॉजिट. स्टार्टिंग में जो कॉर्पस लेते हैं वो लोग पूरा एफडी में डाल के रखेंगे ना. यूजिंग दैट इंटरेस्ट इनकम दे कीप मेंटेनिंग द बिल्डिंग. सो इट विल स्टिल बी अ नॉन प्रॉफिट ऑर्गेनाइजेशन ओनली. आर वी क्लियर अबाउट दिस नाउ बेटा? So far we have understood, guys, that applicability of standards will all depend on the form of organization. Anything that is to be made applicable to a company should come from whom? It should be given under Companies Act. If it should be given under Companies Act as such, guys, it is Ministry of Corporate Affairs that has the power over Companies Act. Anything that is to be given under Companies Act as such, beta, amendments are rolled out by MCA, Ministry of. See guys, when you say decisions are taken by government has different ministries. Okay? One of the ministries is Ministry of Corporate Affairs that takes care of all the parts better that are applicable for governance of companies. So if an accounting standard is to be made applicable to a company as such, better, it is MCA that will roll out that accounting standard. Are we clear? Otherwise, ICAI also will roll out accounting standards. दोनों दो अलग चीज है. Just because ICAI is rolling out an accounting standard, that does not mean it is applicable to a company. For it to be applicable to a company, it should be made applicable by whom? MCA. Only then it will apply to companies. Are you getting the point? If ICAI is not rolling out an accounting standard, then it will not be applicable to other forms of organization. Other forms of organization will not have to worry about what is given under Companies Act. Other forms of organization ke liye, when will accounting standards become mandatory? If they have to get their financial statements attested. Who has to ensure compliance with accounting standards? Member. Member क्या देखेगा बेटा? What are all the accounting standards that are rolled out by ICAI? That is why beta we say two things. That accounting standards are issued by ICAI and they are notified by MCA. If they are issued by ICAI, they will be made applicable to other forms of organization. Only if they are notified by MCA, it will become applicable to. Sir, can there be any differences? There are few amendments that are notified only by MCA but are not rolled out by ICAI. Then it will become applicable only to a. As of now, we do not have any such differences, but time and again, beta, बीच में amendments आते रहते हैं. First, we make them applicable to a company. Then slowly, ICAI also will roll out. If ICAI is rolling it out as such, beta, then it will become applicable to other forms of organization. Different story, guys. Who will make those suggestions to MCA? ICAI only. There is NFRA as such, beta. You will learn about all of that later. There is Accounting Standards Board. They are the ones who are responsible for. But they will give their whatever is the draft extract to MCA, but MCA will notify it. Are we clear about this? So whenever we talk about accounting standards as such, guys, always remember that you will talk about accounting standards that are issued by ICAI. These are the accounting standards that will become applicable to all the other forms of organization. And then there are accounting standards as such, beta, that are notified by MCA. Issued by ICAI mein beta, we had accounting standard 1 to accounting standard 32. Accounting standard 30, 31, 32 were never made applicable. You should announce a date from which the accounting standards will become applicable. ICAI never announced that date only. It kept on postponing the date as such, beta, and the standards were never made applicable. Why? I'll tell you about that under Ind AS. And then beta, apart from that, so you have accounting standard 1 to accounting standard 29. AS 8 beta was withdrawn. AS 8 was in relation to research and development expenditure. We have a better accounting standard called as AS 26, intangible assets, that covers research and development and also covers other aspects. So that is the reason why AS 8 was withdrawn. AS 6 beta was in relation to depreciation. It was merged with AS 10. So basically beta, how many standards do we have at present? 32 standards that were issued by ICAI guys. 30, 31, 32 were never made applicable. So bache 29. 29 mein se I'm telling you that 8 was subsequently withdrawn. 6 is also deleted now because 6 got merged with accounting standard 10. So how many standards are in effect? Only 27 accounting standards are now applicable. Are you getting the point? Yes or no guys? सब पूछ सकता है बेटा, कुछ भी MCQ के लिए याद रखना. So only 27 accounting standards are now applicable beta to other forms of organization. Usme bhi we will see guys that few accounting standards will not be applicable based on the size of the organization. We will cover that after some time. Abhi ke liye, are we all clear about this? Notified by MCA guys. AS1 to AS29 were notified by MCA. They never notified 30, 31 and 32. Because once it is notified by MCA, it becomes applicable. That is why beta they never notified AS 30, 31, 32. Even here beta AS 8 was withdrawn. And guys, AS 6 was merged with AS 10. So even here beta you will have how many accounting standards? Only 27 guys, even under Companies Act. Are we clear? Standards that you see on ICAI's website are the standards that are issued by ICAI. Standards that you see on MCA's website are the standards that are notified by MCA. दोनों की language में थोड़ा difference होता है. Content is exactly the same. Unless there is an amendment that is made applicable only to a company but not made applicable only to other forms of organization. जैसे ICAI beta writes this standard, MCA writes this statement. They do not use the word standard. So there's a difference in terminology as such beta, but the content is not, the accounting principles are not different. The accounting principles are exactly the same. Are we all clear about this? Yes or no guys? इसके अलावा beta there are also something called as guidance notes that are released by ICAI. कभी सुने guidance notes के बारे में? Not every aspect guys is still covered under accounting standard. Ind AS के बारे में बाद में पढ़ेंगे. The new set of accounting standards, Indian accounting standards. You do not have that in your syllabus at CA inter level. That is covered only in CA final. Those accounting standards beta cover exclusive list of things. Existing standards do not cover all the aspects. If there is something that is not covered by an accounting standard and ICAI thinks it is important to issue accounting principles for that also, they do it through guidance note. जैसे बेटा there is no accounting standard that covers accounting for real estate transactions. If you are a builder and you are selling flats, how are you supposed to account for it beta? It is not covered. But then there's a guidance note rolled out by ICAI. They are not mandatory in nature. They are recommendations of ICAI. But वो recommendations मतलब बेटा वो finally है. It is not an option. You are supposed to follow this. It's like putting a gun aside बेटा and सिर्फ बोल रहा हूँ, समझा रहा हूँ, समझ ले बोल के. So those are guidance notes as such guys. That way too many guidance notes issued by ICAI. Again, we do not have that in our syllabus. We only have, अच्छा है sir. We only have accounting standards. Are we clear about this? Now, depending on the size of organization, there are certain exemptions given under accounting standards. Now imagine guys that someone has just started a business. The revenue of the entire year is about 10 lakh rupees. They've made a profit of 1 lakh rupees. If you tell that person that all of these things are applicable, you have to get your financial statements, audited, you will have to get proper accounting done, you will have to file so many returns in the entire year, will that increase the cost of that organization? Just say under GST as such beta, you will see that if the turnover is below 5 crore rupees, you do not have to file monthly returns, you can file quarterly returns. Why do you think they gave that option? Reduce the cost. turnover is 5 crores, that does not mean profit is 5 crores. Many businesses operate on a margin of 1%, 2% better. So that means even if their turnover is 5 crores, their profit might not be 5 lakh rupees. Yes or no? So below 5 crores turnover, they can file returns on a quarterly basis. They do not have to do it on a monthly basis. Then there's another provision which says if the turnover is below 75 lakh rupees, you do not have to worry about, paying taxes on GST. You can follow composition scheme. बोल के एक रहता है. So those options are given as such, guys, under taxes. That is only to reduce what? Cost burden of the SSA. Likewise, under income tax, you will see better that if the turnover is less than 10 crore rupees, audit is not required. If 95% of the transactions are in digital nature, below 2 crores, tax audit not required. मतलब multiple exemptions given as such better. Why do they do that? Reduce the cost burden. Presumptive taxation बोल के देखोगे तुम लोग. So if your turnover is below specified limit, beta, so and so percentage of your income is directly assumed to be taxable. You do not have to maintain books of accounts. So if you're a CA, guys, and your turnover is 40 lakhs, they assume that your income is 20 lakhs. You directly pay tax on 20 lakhs. You do not have to worry about maintaining books of accounts. Why do they do that? Again, reduce cost burden. Likewise, don't you think there should be exemptions given under accounting standards as well? Complying with every accounting standard as such better might increase the cost burden of an organization. This is where, guys, there has been a classification of entities given by ICAI, classification of entities given by MCA. The objective of this classification is only to ensure that they give certain exemptions. They prima facie divide the organizations into larger organizations and smaller organizations. If you are a larger organization, every accounting standard is applicable to you, no exemption to you. If you are a smaller organization, there will be certain exemptions. ये exemptions, guys, are not from basic things like inventories, fixed assets. ये सब follow करना है. There are certain other disclosures that will not be applicable. Are we clear? Objective समझ में आ रहा है? What is the objective, guys? Rishi, can you just move a little bit? The person sitting behind you, I can't see his face. हाँ बेटा, सुन रहा है ना तू? नाम क्या है तेरा? हाँ, गर्वित. There's another Garvit in the class, no? अरे, पास में बैठा इसके. So back to this, guys. Understood the intention here? Any doubt in that part? ये copy करो बेटा. Then I'll start explaining that classification of entities. हाँ, क्या बोल रहा? तेरे को सर्दी लग रही? तेरे को तेरे दोस्तों को छोड़ के जाना होता नहीं बेटा? आज तो 3 दोस्त आए तेरे. हाँ हाँ, जान दे बेटा. Supposed to copy this, guys. AC की जैसे ही बंद होती है उसको देखना बंद करो. कॉपी कर लिया ऑलरेडी. शाबाश. Someone's giving you competition. Are we done writing this, guys? And if you think you will not know what MCA is, please write Ministry of Corporate Affairs. एक बैच में एक बच्चा पूछा था सर, इज इट मास्टर्स इन कंप्यूटर एप्लीकेशंस? क्या समीक्षा? तो ही थी ना वो. Done kids? सेम है बेटा, दोनों जगह जो लिखना है, ओनली फर्स्ट लाइन अलग थी, बाकी सब सेम है. नहीं दिख रहा है तो जो तुम लोग बाजू में लिखे ना वही कॉपी करो. AS8 was withdrawn, AS6 was merged with AS10. Only 27 what are applicable. मेरी मर्जी बेटा, मेरी क्लास, अपने हैं लोग यहाँ पे. Done kids? Write down बेटा. Only accounting standards notified by MCA. उसके नीचे लिखना है बेटा. Only accounting standards. Only accounting standards notified by MCA. Notified by MCA. Only accounting standards notified by MCA will be applicable to companies. Will be applicable to companies. Will be applicable to companies. Standards issued and made applicable by ICAI. Standards issued and made applicable by ICAI. Standards issued and made applicable by ICAI. ICAI will apply to other forms of organization. Will apply to other forms of organization. Next line beta. Guidance notes covers accounting aspects. Guidance notes covers accounting aspects which are not covered under accounting standard. They are only recommendations of ICAI. Now, talking about the classification of entities, guys, I said that we divide entities into categories for the purpose of reducing the compliance burden of the organizations. As far as MCA is concerned, beta, Ministry of Corporate Affairs, they divide the organizations into two categories called as non-SMCs and SMCs. SMC stands for a small and medium-sized company. Non-SMC will be other than a small and medium-sized company. If an entity comes under the category of non-SMC, every accounting standard will be applicable. If it comes under the category of SMC, then there will be certain exemptions given. वो exemptions क्या है बेटा, अभी पूरा समझ में नहीं आएगा तुम लोग को. We will talk about those exemptions as and when we discuss the accounting standards. I will tell you which part of accounting standard is not applicable or applicable as such beta to an SMC. All right. So how do we classify a company as a non-SMC beta? There are 5 points given, 5 criteria. Even if a single point is met, the entity will be classified as a non-SMC. 5 aspects given. Even if a single point is satisfied as such beta, it will be classified as a non-SMC. The first criteria is based on listing status. Listing beta is if a company is listed on a stock exchange. Any company, guys, which is listed or to be listed, even if it is in the process of being listed in India or outside India, does not matter, will be classified as a non-SMC. The reason is very simple, guys. If it's an entity is a listed entity, will there be public at large interested in the affairs of the organization? If public at large are interested in the affairs of the organization, guys, then accounting standards should be made applicable in entirety. All the accounting standards should be made applicable to such an organization. Yes or no? So that's the first point. If it is listed in India or outside India, does not matter. Already listed or to be listed does not matter. Any security, even if your debentures are listed, it will be a listed entity as such, guys, and accounting standards will become applicable. समझ में आ रहा है नहीं आ रहा है? So that's the first point, beta, that is based on listing status. The second point, beta, is based on the nature of business. Remember any point. If it is a bank, financial institution as such, guys, or an insurance entity, bank, beta, will there be public at large interested in the affairs of the organization? Financial institutions, guys, will there be public at large interested in the affairs of the organization? Yes. So basically, beta, if the business is of a financial nature, then accounting standards will be applicable in all. Doesn't matter what is the turnover, doesn't matter what is the capital of the company as such, beta, all the accounting standards will be applicable. That is based on the nature of business. First one was based on listing status. Third one, beta, is based on the turnover limit. Turnover is revenue. If the revenue from sale of goods from primary business activities, beta, revenue from operations exceeds 250 crores in the preceding financial year, then the entity will be classified as a non-SMC. If the revenue is such, beta, from operations exceed, this will not include your interest income or anything as such, beta. All of that is different. That is not your operation. Say if you are running a business of selling goods as such, guys, can you have fixed deposits in bank? Can you generate income on that? That is still your revenue, but that is not revenue from operations. You only take revenue from operations, beta, you do not include other income. So revenue from operations, if it exceeds 250 crores as such, guys, in the preceding financial year, guys, then it will be classified as a non-SMC. Then comes, beta, borrowing. If the borrowing of the entity, guys, at any time during the preceding financial year exceeds 50 crores. Any time इसलिए बेटा क्योंकि borrowings can change throughout the year. That is why for turnover, beta, is for a period. Borrowing will not be for a period. That is why borrowing के लिए बेटा the wording is any time during the previous financial year. Why do they make reference to previous financial year, beta, for these points? Is that we cannot make accounting standards applicable all of a sudden. हाँ या ना? That is why they will always, any monetary limit as such, beta, limits will always be based on preceding financial year. Turnover during preceding financial year, borrowings also during preceding financial year. ये समझ में आ रहा है? The first point, beta, is what? Listing status. Second point is based on nature of business. Third one is turnover. Next is, then beta, there is something called as consolidated financial statements. कभी सुने consolidated financial statements के बारे में? Consolidated financial statements are financial statements of the entire group entities. ठीक है, जैसे if I talk about Reliance Industries as such, guys, Reliance Industries will have their standalone financial statements, will also have their consolidated financial statements. वो छोड़ो, अभी ये बताया था ना, कौन सा था वो? टाटा मोटर्स था ना. So if I talk about Tata Motors as such, guys, these are financial statements standalone. Standalone, beta, these are not consolidated. So this will only include Tata Motors Indian operations as such, guys. This does not include the operations of Jaguar Land Rover. JLR is a subsidiary of Tata Motors, so it will not include the performance of JLR. So इसके आगे बेटा financial statements consolidated beta will be given after this. So these are your consolidated financial statements. As an investor in Tata Motors as such, guys, will you be interested in the operations of only the Indian entity, or will you be interested in the operations of all the group entities? That is why it is mandatory for them to present consolidated financial statements also. How to present those consolidated financial statements? We have that also covered in our syllabus, beta. There's a separate chapter for consolidation of financial statements. We will cover subsidiaries, we will cover associates, we will cover joint ventures. We will see all the accounting procedures there. So why am I talking about all of this, beta, is if you have consolidated financial statements, imagine that holding company ko all the accounting standards are applicable, but subsidiary company all the accounting standards are not applicable. Won't there be a problem in consolidating the financial statements? That is why, beta, they say that if there is a holding company or subsidiary company of any of the above entities, even for them, beta, all the accounting standards are applicable. Please understand guys, पूरे chain में if one has to apply all the accounting standards for the purpose of consolidated financial statements, anyways all the others will have to apply. That is why they made accounting standards applicable. So if you have a holding company or subsidiary company of any of these above points, what does that mean? All the accounting standards as such guys will be applicable. It will be a non-SMC. ये हर जगह आएगा बेटा, holding subsidiary of the above बोल के. Why does it come? Because they have to ensure that everyone follows the same accounting standards. Any doubt in this guys? Yes or no beta? So even if a single point is satisfied guys under any of these, then all the accounting standards will be applicable. समझ में आ रहा है नहीं आ रहा है? Yes or no? Nowhere is it specified beta that all the 5 conditions should be satisfied. It is given beta that only one of the criteria. If you are a listed entity, it does not matter what is your turnover, it does not matter what is your borrowing, it does not matter what is the nature of business. You will be deemed to be a non-SMC. What if this listed entity has subsidiaries? Non-SMC by default beta, because consolidated financial statements ke liye anyways you will have to follow the same accounting principles. Are we clear guys? So you're dividing the entities into 2 categories beta called as non-SMC and SMC based on these 5 points. Anything that is not a non-SMC obviously would come under SMC, small and medium sized company. Are we clear about this? Yes or no guys? This is what beta classification given by MCA to reduce the cost burden of the organizations. Any doubt in this? Then there is classification given by ICAI. ICAI also, ये समझ में आया ना classification? ICAI beta also prima facie divides the businesses into 2 categories called as non-SMEs and SMEs. Entity beta, non-small and medium-sized entities, non-small and medium-sized entities. They cannot use the word company as such beta. They will have to cover all the forms of organization. That is why they use the word entity. Instead of using the word non-SME beta, they use the word level 1. You will see the word level 1 beta that is coming under ICAI. You call them as level 1 entities. SME ke niche beta 3 classifications. Level, smart beta next, and level 4. They have further this is basically beta medium sized entities, smaller companies and micro enterprises. They've divided them into multiple categories again. Companies Act did not do that, but they have that other bifurcation. They say under SME category also it can be a medium sized entity, it can be a small entity, it can be a micro entity. Yes or no? So that is why they've divided those further classifications under SMEs guys. Abhi level 1 as per ICAI is exactly the same as non-SMC. But do not forget beta, it is ICAI only that is giving the classification first, which is followed by MCA. So the 5 points that are given here beta are exactly the same. What is the first point? Listing status. Second one is nature of business. Next one is turnover limit. Next one is borrowing limit. Holding subsidiary of the above. ठीक है? For listing status, for nature of business, I cannot have multiple sub points. For turnover, for borrowing, because it is a limit, quantitative limit, can I have sub points? Yes or no guys? Last वाला क्या था बेटा? Holding subsidiary of the above. For the turnover status and borrowing as such guys, we can have specified limits again. How will you remember? It is pretty simple beta, divided by 5. First वाले के लिए limit क्या था? 250 crores. Next वाले के लिए limit क्या था? 250 crores divided by 5. Divided by 5. 50 crores divided by 5 beta. 50 by 5 कितना होता है? 10 by 5. The limits are based on this. If the turnover of the entity exceeds 50 crores but does not exceed 250 crore, it will come under level 2. If it exceeds 250 crores, it is already coming under level 1 entity. What if the turnover of the entity is 249 crores? Level 2. What if the turnover of the entity is 51 crores? Level 2. Level 2 के लिए क्या है बेटा? It should exceed 50 crore but should not exceed. So if an entity whose turnover exceeds 50 crore but does not exceed 250 crore, it will be classified as a level 2 entity. Or if the borrowings of the entity exceeds 10 crores but does not exceed 50 crores at any time during the preceding financial year, it will be classified as a level 2 entity. But what if the turnover is less than 50 crores? You go to the next limit. If the turnover of the entity exceeds 10 crores but does not exceed 50 crores, it will be classified as a level 3 entity. Or if the borrowings of the entity as such beta exceeds 2 crores but does not exceed 10 crores, it will be classified as a level 3 entity. So what if the turnover is less than 10 crores? What if the borrowing is less than 2 crores? Last category beta, residual category. Why didn't we not have all of these limits under Companies Act? All the residual category, there was only one. But यहाँ पे we do not have one category beta, we have 3 categories under that again. That is why we have limits. First वाले point के लिए beta, can they have one that is partially listed? They cannot have a, it is either listed or it is unlisted entity. That is why you will not have those points beta under level 2, level 3, level 4. It is either a bank or it is not a bank. Can it be partially bank beta? So that is why for first 2 points you cannot have limits given beta under the other 3. Are we clear about this? Only for turnover and borrowings there will be limits given, and it is very easy to remember beta, divided by 5. That is how you're going to remember. Even turnover and borrowings has the same relation, divided by 5. Turnover 250 crores, uska divided by 5. Borrowing 50 crores. All other limits also keep dividing it by 5 beta. You will keep going to the next level. This is the classification given by ICAI. Are we clear guys? यहाँ पे भी वो रहेगा beta, that is holding subsidiary. So if it's a level 2 entity and they have a subsidiary whose turnover is more than 10 crores, it will still be classified as a level. Imagine there is a holding company, holding entity beta, whose turnover is 52 crores. Will it be a level 1 entity, level 2 entity, or level 3 or level 4? Level 2. What if they have a subsidiary entity? Jara suno, ek second. Whose turnover beta is 100 rupees. Remember Tanay's business? Whose turnover is 100 rupees as such guys. So practically if this was not a subsidiary, it should have come under level 4, residual category. But because their holding entity beta is coming as a level 2 entity, this also will be coming as a level 2 entity. Are we clear? Yes or no? Sir, what if this holding company has a holding company as such beta whose turnover is 251 crore? Then everyone in that group beta will become a level 1 entity. Any one in your group beta is a level 1 entity. Every other entity also will become a level 1 entity. Always remember that. Are we clear about this? Any doubt in this beta? समझ में आ गया? लिखो guys. Classification of entities. What happened, Karthik? Smiling. Just like that. Good to see me again. Someone's happy about seeing me again. I'm happy about that fact beta. There are others who are crying internally. वापस इसकी शक्ल दिख रही है मिलके. क्या गुरु? Yes beta. क्या लिखे सारे reading? Classification of entities. मेरे को dictate करना है ना. एक second guys. In order to reduce the compliance burden, in order to reduce the compliance burden, in order to reduce the compliance burden, entities are segregated. Entities are segregated. There's an option called as silent mode guys in cell phones. Activate करना नहीं आता है तो बोलो बेटा, सिखाता हूँ. अरे जीतू क्या कर रहा है? दोनों के बीच में अलग ही मूवमेंट रहते हैं. Yes guys, what are we talking about? In order to reduce the compliance burden, entities are segregated into multiple categories. Entities are segregated into multiple categories. Multiple categories based on listing status, based on listing status, nature of business, turnover, borrowings, टर्नओवर बोरोइंग्स, उसके नीचे बेटा क्लासिफिकेशन बाय एमसीए, क्लासिफिकेशन बाय एमसीए, उसके बेस्ड ऑन टर्नओवर बोरोइंग्स, फुल स्टॉप, उसके नीचे नेक्स्ट सेंटेंस क्लासिफिकेशन बाय एमसीए. फर्स्ट पॉइंट गाइस, नॉन एसएमसी, क्लासिफिकेशन बाय एमसीए के नीचे लिख लेना फर्स्ट पॉइंट, नॉन एसएमसी, नॉन एसएमसी. What does SMC stands for? Small and medium sized company. Companies Act में बेटा they do not use the word SMC, they use the word MSME. But ठीक है, यहाँ पे बेटा we use the word SMC. It's the same thing. Non-SMC guys, SMC stands for small and medium sized company. So write down. A company will be classified as a non-SMC. Company will be classified as a non-SMC. Company will be classified as a non-SMC if any one or more of the following 5 conditions are satisfied. Online students, I'm in front of the screen only. If any one or more of the following 5 conditions are satisfied. Any one or more of the following 5 conditions are satisfied. First point, मतलब A जैसे लिख लेना या जो भी है numbers देख के. First point guys, if it is a listed entity, or is in the process of being listed, if it is a listed entity or is in the process of being listed, or is in the process of being listed in India or outside India, or is in the process of being listed in India or outside India, in India or outside India. क्या हैंडराइटिंग क्रेजी है तेरी? अच्छा ठीक है, कुछ तो क्रेजी है, जान दे. नेक्स्ट पॉइंट गाइस, फर्स्ट पॉइंट हो गया ना बेटा, लिस्टेड एंटिटी और इन द प्रोसेस ऑफ बीइंग लिस्टेड इन इंडिया और आउटसाइड इंडिया. Many Indian entities better list their securities outside India. It is very common for them to get their debentures listed outside India and raise money in the form of debt outside India. So even such entities better would be classified as non-SMCs. याद रखना. It need not be Indian stock exchanges only. It can be stock exchanges outside India. Second point guys. The company is a bank. The company is a bank. Company is a bank. Financial institution, bank, financial institution, or an insurance entity. Bank, financial institution, or an insurance company, or an insurance company, or an insurance company. Third point, turnover of the company, turnover of the company, turnover of the company during the preceding financial year, turnover of the company during the preceding financial year, during the preceding financial year exceeds 250 crores. Turnover of the company during the preceding financial year exceeds 250 crores. Remember the wording is exceeds 250 crores. Even if it is exactly 250 crores better, the condition is not met. Alright, exceeds 250 crores. Next बेटा, fourth point. यहाँ पे brackets में लिख लेना बेटा 250 crores के. It does not include other income. It does not include other income. Basically, it should only be revenue from operations. It does not include other income. Next point. क्या था बेटा? हाँ, borrowings of the company. Borrowings of the company exceeds 50 crores. Borrowings of the company exceeds 50 crores. Exceeds 50 crores at any time during the preceding financial year. At any time during the preceding financial year. At any time during the preceding financial year. Last point. Holding or subsidiary of the above companies. Holding or subsidiary of the above companies. Holding or subsidiary of the above companies. Are we clear, guys? So even if a single condition is met, beta, you'll be classifying that as what? Non-SMC. Next wala beta is SMC. What will be an SMC, beta? Anything other than, so all the companies beta other than non-SMCs would be classified as SMCs. SMC, guys, is one that is other than a non-SMC. Exam, if they ask us to define SMC, do not forget you're also supposed to define non-SMC. Do not write only one sentence. Any company that is not a non-SMC will become a SMC. Bolke. Is that clear, guys? Now, as far as classification by ICAI is concerned, guys. Classification by ICAI. ऐसे लिख लो बेटा. Level 1. And then SMEs के नीचे you have level 2, level 3, level 4. Level 1 beta is exactly same as non-SMC. क्या कर रहा है कृष्णम तू? Level 1 beta non-SMC is exactly the same as non-SMC. Now, level 2, level 3, level 4, guys. You will have limits only based on what? So, talking about turnover beta first. Turnover के लिए क्या बोला था बेटा मैं? It exceeds 50 crores but does not exceed 250 crores. Greater than 50 crores but less than or equal to 250 crores. As far as borrowing is concerned, guys, वहाँ पे it was 50 crores. So what will be the limit here? Exceeds 10 crores but does not exceed 50 crores. Borrowings beta exceeds 10 crores but does not exceed 50 crore rupees. For the next one beta, level 3, what is the turnover limit? Exceeds 10 crores but does not exceed 50 crores. Borrowings के लिए beta again divided by 5. It exceeds 2 crores but does not exceed 10 crores. Level 4 beta will be obviously your residual category. यहाँ पे ये भी आएगा बेटा. What is that? Holding or subsidiaries of the above. Same point will come for level 3 also. Level 2, level 3, level 4, guys, you have limits based on only turnover and borrowing criteria. Are we all clear about this? holding or subsidiaries of the above, guys. Same point will apply to level 3 entities as well. Any doubt? Now guys, as I told you, the whole objective of classifying the entities into these categories beta is to give them certain exemptions, correct? Whenever an entity is availing exemptions, guys, there should be a disclosure made under notes to accounts. Of what are notes? Whenever we define financial statements as such, guys, the financial statements of an entity includes क्या बेटा? Balance sheet. You will have a statement of profit and loss. एक second मेरे को ज़्यादा ही ऊपर चले गया. Financial statements, guys. So here बेटा financial statements का जो section start हो रहा है, this is audit report. So for financial statement standalone as such, guys, includes balance sheet. It is mandatory to present a balance sheet. You will have to present your statement of profit and loss. There will be a cash flow statement, and then beta there are notes to accounts. इसके अलावा बेटा you also learn one point under Companies Act, that is called as statement of changes in equity. There are 5 points actually covered in the definition of financial statements under Companies Act. There is balance sheet, there is statement of P&L, there is cash flow statement, there is statement of changes in equity, and then there is notes to accounts. Or you can learn that as other explanatory statements, whatever are the explanations required for your this thing. Statement of changes in equity is not covered under CA inter-syllabus because it is applicable only to those entities that have to apply the new set of accounting standards. Ind AS. Ind AS is not covered in our syllabus. You will learn Ind AS only in CA final. So basically beta, as of now we have two set of accounting standards. One is Indian GAAP, that is the old accounting standards. The new ones that are called as Ind AS. You write like this beta. Ind AS basically refers to Indian accounting standards. Both the set of accounting standards are applicable. It is not that the old accounting standards have become redundant, they are useless. There are many companies beta that are still covered by old accounting standards. In fact, beta, approximately 97 to 98% of the companies are still covered by old accounting standards. It's only the balance 2% beta that is covered by Ind AS. So there is Indian accounting standards and then there are the old accounting standards as such, guys. ये जो statement of changes in equity है beta, that comes only under Ind AS. It does not come under the old accounting standards. That is why beta here for the time being, whenever we are defining financial statements, I will make in accounts beta, I will make reference only to balance sheet, P&L, cash flow statement and notes to accounts. I will not make any reference to statement of changes in equity. If they ask you to write the definition under Companies Act in law paper, you're also supposed to mention statement of changes in equity. You cannot skip that there. Here beta, you can skip statement of changes in equity. What are these notes to accounts, guys? Every explanation that is required to be given in relation to your financial statements are given under notes to accounts. The very first accounting, matlab under notes beta, you will always see what are all the accounting policies that are being followed by the company. In relation to every item beta, what are the accounting policies that are being followed, and then there will be disclosures. Just a share capital agar hai, to is it preference share capital or is it equity share capital? How much was there at the beginning of the year? How much is there at the end of the year? Who are our major shareholders? उनके नाम भी आते हैं यहाँ पे है या नहीं? हाँ, जैसे who's holding more than 5% of your paid up share capital as such beta, those names also appear under notes to accounts. If it is reserves and surplus, what are all the different reserves that you have? Do you have only P&L or do you have different reserves as such, guys? If it is a borrowing, is it secured? Is it unsecured? Is it in the form of a debenture? Is it from a bank? All of those disclosures beta come under notes to account. कहना क्या चाह रहा हूँ बेटा? There's an objective of having notes to accounts. Majority of the explanations that you will see as such beta will be given only under notes to accounts. ठीक है? So a company beta that is not a non-SMC, basically if it is not a level 1 entity as such, guys, if it is a smaller organization and if it is availing exemptions that are given, they will have to make a disclosure under notes to accounts. That because we are level 2 or level 3 or level 4 entity, we have been given certain exemptions under accounting standard rules and we have availed those exemptions. That is why we are not presenting so and so information. समझ में आ रहा है? जैसे आगे जाके we'll see that there is cash flow statement के बारे में तो सुने ना बेटा. Cash flow statement, guys, is not required to be presented by a small company. ठीक है? So if at all such small company is availing that exemption as such, guys, they will have to give a disclosure under notes to accounts. that a cash flow statement need not be presented. That is why we are not presenting it. We have to specify that an exemption has been given. Are we clear about this? That does not mean you do not follow the accounting standard and present something else only. If you want to present a cash flow statement, it should be exactly as per the principles given under AS3 cash flow statement. You do not want to present a cash flow statement, chalega. Just because AS3 is not applicable to you, that does not mean you present something else only in the form of a cash flow statement. You either avail that exemption, make a disclosure, or you follow the accounting standard. You cannot do anything else. Are we very clear about this point? So what are we learning better? Whenever a company is availing any exemption that are given under accounting standards better to smaller organizations, it is mandatory for them to disclose that fact under notes to account, so that whoever is reading the financial statement better will know that because the entity is a smaller organization, they have not presented this. This is segment reporting बोल के एक standard है. I was just talking about it sometime earlier. If you have multiple businesses, you will have to give disclosures under notes to accounts. समझ में आ रहा है ना? So that segment reporting also as such, guys, is not applicable to smaller organizations. It is applicable only to level 1 entities. So if it's a smaller organization, beta, they will not present segment report. Segments में they are presenting this information. How much is the revenue from Tata vehicles? How much is the revenue from Jaguar Land Rover? This comes only because of one standard, but this standard is applicable only to larger organizations. It is not applicable to smaller organizations. Can smaller organizations present this segment information? Yes. It is an exemption given, not compulsory that you want to avail it. If you want to avail it, give a disclosure. Just say, beta, if you get 60 plus in any paper, say someone beta gets 60 plus in a paper and it does not clear the group, will he get an exemption in that paper? Is it mandatory to avail that exemption? No. You can give up your exemption as such beta and still attempt all the papers. Why will someone want to do that? Rehte beta thode log. You will not get a rank if you have an exemption in one paper and you're carrying it forward. So few people beta who are aiming for a rank, they'll be like, nahi chahiye exemption, we will do so much better in the next attempt that will directly get AIR 1 only. बीच में बात ही नहीं करेंगे बोल के. I have that student as such beta, एक student था ऐसे final में, he gave up an exemption 2 साल पहले, then he's like, nahi I'll get a rank in the next attempt बोल के. जो पेपर में exemption छोड़ा ना वो उसमें फेल हुआ. सबका रहता बेटा, but I'm just telling you. Are we clear about this? So what is that beta? If you have to avail an exemption, what are we supposed to do? Disclose it. Just because an exemption is available, is it mandatory for you to avail that exemption? No. You can choose not to avail the exemption and still disclose the entire information that is required as per accounting standard. Are we clear? Now coming to the next point as such, guys. What if there is a change in classification? You were a non-SMC, now you became an SMC. Or you were an SMC, but now you become a non-SMC. Just because you do not want to disclose, beta, will you want to remain an SMC? Imagine that your business is growing year after year as such, beta, turnover is exceeding. Will you not want to sell? नहीं यार, turnover बढ़ गया तो we have to apply all the accounting standards. कोई सोचेगा ऐसा कभी? And अगर ऐसा कोई सोच रहा है बेटा, he will not want to grow in life only. Yes or no? क्या हर्ष? So guys, if there is a change in classification, what are we supposed to do? You were a non-SMC and now you have become an SMC. Your turnover was always more than 250 crores, but suddenly there is no demand for the product as such, and that is why the turnover of the company has come below 250 crores. Possible? Yes or no, guys? So for the year 2023-24, you were a non-SMC. If you are a non-SMC as such, will you have to comply with all the accounting standards? Compulsorily? Yes. So in the year 2024-25, you become an SMC. How do you become an SMC? The turnover in the preceding financial year did not exceed 250 crores, or the borrowings at any time were not more than 50 crores. That is why you become an SMC. Will exemptions be available to you? The answer is no. Exemptions will not be available to you unless you remain in the category of SMC for 2 continuous years. Which means exemptions will now be available from the year 2026-27. If there is a downward reclassification, You should remain in that category beta for a period of 2 years. Only then you can avail exemptions. Otherwise, exemptions will not be applicable. Are we clear? Any downward classification, you were a non-SMC, you have now become an SMC. So what if by 2026-27 you become a non-SMC again for 1 year, and वापस you become an SMC? Exemptions will not be available till you remain in the category of SMC for a continuous period of 2 years. Are we clear? Whenever there is a downward reclassification, you are supposed to avail the exemptions only if that downward reclassification holds good for a continuous period of. Are we very clear about this? Yes or no? ये आज तक कभी पूछा नहीं बेटा एग्जाम में. What they ask is only the limits. मतलब when will it be a level 1 entity, when will it be a level 2, level 3 entity. Change in classification was never tested in the examination till now, but we're still supposed to know. Just in case they want to ask a new question, they can ask this. If there is a change in classification, what are we supposed to do? So say guys, if you were a non-SMC, you were supposed to present segment reporting. Okay? 2024-25, you become an SMC. In spite of you being an SMC, you will still have to present segment reporting. Exemptions are not applicable. It is as if you are a non-SMC only. For 2025-26 also, it is as if you are a non-SMC only. Only if you remain in that category as such beta for another year. From the next year, you will start availing those exemptions. Are we clear about this? Yes or no, guys? What if it is an upward reclassification? You were a SMC in the year 2023-24 and you now become a non-SMC in the year 2024-25 and 25-26 also you are a non-SMC. 26, crazy in handwriting, you are a non-SMC. Now what guys? Immediate application, no 2 years. क्योंकि यहाँ पे application आ रहा है ना बेटा, you will not be like चल 2 साल रुकते, then we will decide whether it is applicable to you or not. So if you were an SMC and then beta you get converted into a non-SMC, accounting standards will become accounting standards. मतलब the exemptions given to you as such beta will no longer apply. You will have to comply with all the information. समझ में आया? Downward reclassification, wait for upward reclassification, immediate effect, no waiting period, nothing as such beta. You will have to comply with the accounting standards, all the accounting standards immediately. Any doubt in this point? Yes or no? Now guys, 2023-24 you were a SMC. 2024-25 you became a non-SMC. Will segment reporting be applicable? Will segment reporting be applicable? 23-24 segment reporting is not applicable. 24-25 segment reporting is. Whenever a company presents financial statements, they will also have to give comparative data for the previous year. ये दिख रहा है बेटा, light figures जो दिख रहे हैं ना, ये comparative data है. How are they presenting the comparative data? Their wish. But every company is supposed to give comparative information for the previous financial year also. When a company is going for IPO, when they submit financial statements to SEBI, they have to give comparative data for 5 years. Last 5 years के data should be given. But under Companies Act as such beta, you have to give comparative data only for the last year. Are you getting this point, guys? ये देखो. Do we have information, comparative data beta given for the previous year? We have 2016, we have 2015. So when I'm presenting my financial statements beta for the year 2024-25, am I supposed to give comparative data for 2023-24? I am supposed to give segment information for the year 2024-25. Uska comparative data, is it available with me? Because I never presented segment information in the previous year. Yes or no? Are you trying to get the point here? Yes. Let us once just recap as such beta. If you are an SMC and you become a non-SMC, will accounting standards be applicable immediately? Upward reclassification, there is no benefit given. You will have to comply with all the accounting standards. Understood? Now I'm talking about comparative data. 2024-25, when I'm presenting my financial statements, I will have to present segment information. I may also have to give comparative data for the previous year, but the problem here is what? I do not have that comparative data of the previous year. Why don't I have the comparative data of the previous year? We never presented segment information in the previous year because we were an SMC. यहाँ पे बेटा the rules say that you can give a note that comparative data is not being presented because we were an SMC in the previous year and exemption was available. ठीक है. However, it is recommended that you give comparative data. We are recommending that you give comparative. मतलब दे दे चुपचाप. However, the rule is what, guys? You can give a note that we are not presenting comparative data for so and so information because we were an SMC in the previous year and there was an exemption available. Doesn't it make sense, guys? Because obviously you will not want us to rework the entire data as such data for the previous year. That is why we are giving an exemption. Is that clear? Understood what is to be done under change in classification? So, pehle guys, if you are an SMC, is there any disclosure required? If you are an SMC availing exemptions, मैं इसमें नहीं हूँ बेटा अभी, मैं चले गया पीछे कहीं तो भी. Financial statements covers what all things? Balance sheet, statement of P&L, cash flow statement, and notes to accounts. Correct, guys? So if an SMC is availing any exemptions, will there be any disclosure required? Yes, it is mandatory to give a disclosure under notes to accounts. Are we clear? एक दो चेहरे नहीं दिख रहे बेटा, क्लास के बाहर जाओगे. It is mandatory as such, guys, to give disclosure under notes to accounts. Is it mandatory for us to avail exemptions? There is no compulsion that we have to avail exemptions. We can comply with all the accounting standards. If you're complying with all the accounting standards, better, there is no information to be given under notes to accounts. Only if you are availing exemptions, you will have to give a disclosure under notes to accounts. Understood? After that, if there is a change in classification of entity, you were an SMC last year and you have now become a non-SMC. This is upward reclassification. If there is upward reclassification, guys, you will have to comply with all the accounting standards with immediate effect. Are we clear? There is no waiting period or grace period of 2 years here. However, because comparative data of the previous year may not be available, you will have to give a disclosure under notes to accounts that you being an SMC in the previous year have availed certain exemptions and that is why comparative data is not available. If there's a downward reclassification from non-SMC, you become an SMC. Then what are we supposed to do? You're supposed to wait for 2 years. What will you do better after waiting for 2 years? Start availing those exemptions. If and only if you continue to remain in that category. Meanwhile, you again come back. Ab jaise better during COVID times, wherein the turnover was very low for many companies. Many companies might have got downgraded as such better from a non-SMC to an SMC. But then immediate next year as such better turnovers again increased. So they will again come back to the category of non-SMs. That means better they will have to comply with all the accounting standards. There will not be any exemption available. Crystal clear, guys? Yes or no? Chalo guys, let's take a break. Sir, if the turnover of an entity keeps fluctuating near a limit like 51 crores in 1 year, understood. Yeah, beta. Online students, we have a break of 10-15 minutes. The live session is on, beta. I will resume. I will send a message. All right, guys. So we spoke about the exemptions that are available as such, guys, to SMCs. Sorry, the classification of entities, guys. I have to give notes for the change in classification. Correct? कहाँ तक लिखे बेटा वो classification by ICAI भी हो गया है ना? Next line, guys. Write down. Next line. The financial statements of an entity includes, उसको देख आगे बोलो ना कहते, अच्छा बुक ही नहीं निकाली अभी तक. Financial statements of an entity includes थोड़े गधे लोग बुक्स निकाल रहे. हो गया बेटा मैथली. Financial statements of an entity includes balance sheet, statement of P&L, cash flow statement, and notes to accounts. cash flow statement and notes to accounts. Notes to accounts. Notes to accounts. Statement of changes in equity is required to be present. Statement of changes in equity. Statement of changes in equity. Changes in equity is required to be presented. Is required to be presented. Required to be presented only by companies following Ind AS. Only by companies following Ind AS. Only by companies following Ind AS. Brackets में बेटा new accounting standards. In brackets new accounting standards. All the explanations required. All the explanations required. All the explanations required in relation to financial statements. All the explanations required in relation to financial statements are given under notes to accounts. All the explanations required in relation to financial statements are given under notes to accounts. Are given under notes to accounts. Notes to accounts. Next. SMEs availing exemption. Next line. SMEs, SME, SMEs or SMCs, SMEs or SMCs availing exemptions, availing exemptions, SMEs or SMCs availing exemptions are required to disclose it under notes to accounts. Are required to disclose it under notes to accounts. Are required to disclose it under notes to accounts. Notes to accounts. It is not mandatory to avail exemptions. It is not mandatory to avail exemptions. It is not mandatory to avail exemptions. However, no entity can violate the principles of accounting standard. No entity can violate the principles of the accounting standard. No entity can violate the principles of the accounting standard. It should either avail exemptions. It should either avail exemptions. Avail exemptions. Or follow the accounting or comply with the accounting standard. It should either avail the exemption or comply with the accounting standard. Comply with the accounting standard. Avail the exemption or comply with the accounting standard. Are we clear, guys? Yes or no? Next heading, change in classification. Change in classification. First one, guys. Non-SMC to SMC. Non-SMC to SMC, in brackets downward. Downward. Exemptions applicable to SMC. Exemptions applicable to SMC. Exemptions applicable to SMC will be available exemptions applicable to SMC will be available only if the entity remains in the category of SMC, only if the entity remains in the category of SMC, for a continuous period of 2 years. Only if the entity remains in the category of SMC for a continuous period of 2 years. For a continuous period of 2 years. Continuous period of 2 years. So financial year 23-24 ऐसे लिखना बेटा, if it's a non-SMC. Financial year 24-25 it becomes an SMC. Will there be any exemptions available? No exemptions. Financial year 25-26 it is still an SMC. Will there be any exemptions? No exemptions. Now financial year 26-27 guys, if it remains in the category of SMC, only then beta exemptions will be available. Are we clear guys? Exemptions will be available from the year 2026-27. Next point, SMC to non-SMC guys, that is upward reclassification. SMC to non-SMC. SMC to non-SMC, upward classification. What did I tell you beta regarding upward classification? Right down. The entity will have to immediately comply with all the accounting standards. All the accounting standards. Comparative information in respect of the exemptions availed in the previous year, in respect of the exemptions availed in the previous year, in respect of exemptions availed in the previous year, need not be presented. However, it is recommended that an entity presents it. The comparative data. It is recommended that an entity presents comparative data. Recommended that an entity presents comparative data. Are we clear guys? Yes or no beta? Now example guys, इसके नहीं चाहिए. Financial year 23-24 beta, say you are an SMC. Now I gave the example of segment reporting. Will segment reporting be applicable beta? Segment reporting not applicable because you are an SMC. We will cover this standard in detail later. As of now, segment reporting will not be applicable because it is an SMC. Financial year 24-25 guys, you become a non-SMC. Because you are a non-SMC as such guys, will segment reporting be applicable? Segment reporting is applicable. For the current year, because you are a non-SMC guys, you will have to comply with segment reporting. Any doubt in this? When you are presenting guys financial statements of the year 2023-24 FS, तुम्हारा current year beta will be what? 23, 24. This is current year, CY. Previous year data that you have to give better comparative data will be for which year? 22 and 23. In both the years as such, guys, sun lo ek second. Segment reporting is not required. Hi Anna. Why? Because you are an SMC. You do not have to present data of segment reporting. Whether it is current year or previous year comparative data, guys, it will not be required. When you're presenting financial statements of the year 2024-25, guys, then current year beta is 2024-25. Will segment reporting be required? Definitely yes. Comparative data for the previous year beta 23-24. Will segment reporting be required? Not required. It is recommended that they present it, but it is not required to give comparative data for the previous year. समझ में आया ये point अभी? Yes or no, guys? Make a note better. CY stands for current year. If you think you won't remember, write the full form. Done with this? Current year, when you're presenting the data, guys, you will have to present segment reporting. For the previous year, segment data will not be required. Done, guys. Now, a quick recap of what we did with us so far. Then I'll talk about Ind AS. We do not have Ind AS in our syllabus, but that they've still mentioned what is the applicability part of Ind AS. So in case they ask those questions in MCQs, we should be prepared. So we'll cover that part as well as to whether to which entities are Ind AS applicable. Now, as far as the applicability of accounting standards are concerned, guys, I told you that it depends on the type of organization, form of organization. Under Companies Act, it is clearly prescribed that the financial statement should be in compliance with accounting standards. That is why if an organization is registered in the form of a company, guys, it should comply with all the accounting standards, whether or not they want to get their financial statements attested. For other forms of organization as such, guys, accounting standards are not directly applicable as better. However, if these organizations would have to get their financial statements attested, audited, it is mandatory for the chartered accountant who's certifying those financial statements to ensure that the financial statements are in compliance with accounting standards. So this is the indirect application to other forms of organization. Under these organizations also better, if there's a 100% charitable or a religious organization, accounting standards will not be required to be followed, even if such entities as such better are getting their financial statements attested or audited. Are we clear about this? Next better, I said under application part also as such, guys, because you cannot expect all the entities to follow all the accounting standards as such better. The entities have been segregated. There's a segregation given by ICAI. There's a segregation given by Ministry of Corporate Affairs. Whatever is rolled out by ICAI will become applicable to the other forms of organization. Whatever is being rolled out by MCA will become applicable to companies. So for companies, better, we directly divide the entities into only two categories. There is non-SMC and SMC. Non-SMC being larger organizations, better, all the accounting standards will be applicable. Exemptions, if any, will be given only to SMCs. They do not have to apply all the accounting standards. Now, SMC ke liye beta, there are 5 points given. Even if a single point is satisfied, an entity will be classified as a non-SMC. The first point beta is based on listing status. If a company is listed, guys, or in the process of being listed in India or outside India, it will be a non-SMC. Second one, beta, if the company is a bank, financial institution, or a insurance company, it will be a non-SMC. Third point, guys, if the turnover of the company exceeds 250 crores during the preceding financial year, it will be non-SMC. Then beta, the borrowings of the entity exceeds 50 crores at any time during the preceding financial year, it will be a Non-SMC. The last point, guys, holding subsidiary of any of the above entities. 3-4 people not revising, but I'll talk to you guys after the class and decide whether you'll be allowed or not on Monday. So, holding or subsidiary, guys, of the above entities. Are we clear about this? Next, beta, SMC is any company that is not a non-SMC. As far as the classification by ICAI is concerned, guys, we divide them into 4 categories. There is level 1, which is a non-SMC. Then there is level 2, level 3, and level 4. Level 1 is exactly the same as non-SMC. Level 2, level 3, level 4, beta, the limits are for turnover and borrowing. Just divide the earlier limit by 5, you will get the revised limit. So level 2 के लिए बेटा turnover exceeds 50 crores but does not exceed 250 crores. Borrowings exceeds. एक second ना, हाँ, ब्रिजेश. Borrowings exceed. तू नहीं बेटा. यहाँ पे एक ब्रिजेश है. तेरा नाम मालूम है ना देखो. ब्रिजेश नाम क्या है तेरा? हाँ. So borrowings exceed 250 crores. तो मैं देखो देख रहा था तू 250, 50, 10 सब बोल दिया एक ही साथ. देखो समझ में ही नहीं आ रहा कौन सा आंसर है बोल के. तू सुन रहा है ना तब से. बहन को बोलूंगा जूते मारेगी देखो. Borrowings of an entity beta exceeds 10 crores but does not exceed 50 crores. Then it will become a level 2 entity. And the last point, holding subsidiary of the above entities. Level 3 beta, divide by 5 again. Turnover exceeds 10 crores but does not exceed 50 crores. Borrowings exceeds 2 crores but does not exceed 10 crores. Holding subsidiary of the above. Level 4 beta is residual category. Whenever an entity wants to avail exemptions that have been given beta, you will have to make a disclosure under notes to accounts. It is not mandatory for you to follow those exemptions. If there is a change in classification of the entity beta, you will have to check whether it's a downward reclassification or an upward reclassification. If it's a downward reclassification, exemptions will not be available unless the entity remains in that category for a continuous period of 2 years. If it's an upward reclassification beta, you will have to immediately comply with all the accounting standards. However, comparative data, guys, will not be required in respect of the exemptions that were availed in the preceding year. It is recommended that you give, but it is not mandatory. What about same thing beta, it is not required. However, downward shift matlab you were a non-SMC, now you become an SA. Nahi beta, isme guys, nahi. When you're not presenting that data only in the current year as such beta, there's no point of giving comparative data in respect of the previous year. Just if I'm not presenting segment reporting in the current year, guys, because I have finally started availing those exemptions, the point of giving only comparative data will not make any sense. Then you become a level 3. I knew someone would talk about this. But if you were a level 1 entity, guys, and for 2 years you are in level 2, then you shift to level 3. Tanay has become the CEO of the organization. So we have a gradual promotion here. So when you become a level 3 entity beta in the 3rd year, level 2 ke exemptions will start becoming applicable to you. Yeah, and then you will talk about level 3. The previous category, matlab there is nothing given as such beta, but then it is only based on the interpretation. It would make sense for you to start availing the exemptions of level 2. Uska doubt samajh mein aaya? You are a level 1 entity, you remain in the category of level 2 for 2 years. Then you become a level 3 entity. By the time level 2 exemptions were supposed to be made applicable, there's a further downward reclassification. You will start availing the exemptions of level 2. Then if you remain in the category of level 3 for 2 years, after that you will start availing. By then if you reach level 4 also beta, level 3 and then level 4. Are we clear? Yes guys. Now beta, as I told you that we have 2 set of accounting standards. I'm talking about Ind AS beta now. There is Indian GAAP. Indian GAAP beta is nothing but the old accounting standards that are applicable as such beta at CA inter level. And then beta there is Ind AS. These are your new accounting standards or Indian accounting standards that will be covered only in your CA final. Entire CA final syllabus is only Ind AS. Entire CA inter syllabus is only old AS, Indian GAAP. Now, why do we have 2 set of accounting standards? Is many existing accounting standards were not based on the concept of time value of money. We do not consider time value component in a lot of accounting standards under the existing ones. There are a couple of accounting standards wherein we do have time value component because those standards were revised recently. recently, matlab 2011, 12, 13, 14, 2004. That is also recent only, because many of these accounting standards beta have been in existence since 1990s or 1985. That is where the accounting standards were rolled out. So many of the accounting standards are not based on the concept of time value of money, and not many accounting standards are based on the changing scenarios as such, guys. Internationally, there were IFRS, International Financial Reporting Standards as such, guys, that were made applicable. Many countries are member nations of this IFRS, International Accounting Standards Board, IASB. Even India is a member of IASB. So at the international level, they've decided that we should apply certain standards that are common to all the countries as such, guys, so that we can compare the financial statements of entities not just within the country but also with the companies of other countries. If someone wants to compare the financial performance of a tech company in India with the financial performance of a tech company in US, imagine if they are following two separate set of accounting standards as such, guys, then the financial performances are not comparable. Yes or no? This is where IFRS came into picture, guys. Ind AS are based on IFRS. We did not exactly copy IFRS, but then we made certain changes as per our local economic environment. Something that is not suitable for the Indian economic environment, we did not incorporate that, we made changes. But the whole objective of implementing Ind AS in India as such was to ensure that the financial statements comply with the international accounting standards. Once you do that as such, there will be more global recognition also for Indian entities. If you do not do that as such, foreign investment bhi aana kam ho jayega. See, if they know that the accounting policies that you're following are way too conservative as such, guys, or they're not up to date with the international standards, entities might not want to invest in the Indian entities. But if you are following Ind AS as such, guys, that are more or less in line with IFRS, it will be easier for Indian entities to raise funds also from other entities, from other companies abroad. Understood? So the whole objective of Ind AS is to make Indian financial statements comparable as such with the international financial entities. Are we clear about this? The problem with Ind AS is that they're too aggressive in accounting. When I say too aggressive in accounting as such, अभी तक तुम्हारे को बोल रहा था that asset is initially recognized at cost, subsequent measurement will all depend on how are you deriving economic benefit. जैसे if it is current investment, we record at what cost or fair value, whichever is lower. Ind AS बोलता है भाड़ में गया cost. We will record investments at fair value. We will transfer the difference to P&L account. So it is aggressive in nature. Ind AS is such, the accounting is way too aggressive. Just say existing standards will tell us that intangible assets can have a maximum life of 10 years. They will say that intangible assets can have an indefinite life. Not necessary that your brand should only remain in existence for 10 years. Your brand can remain in existence forever. Possible or not? So there are significant changes as such, guys, between the existing standards and the new standards. Itna yaad rakhna that Ind AS are aggressive accounting, aggressive in terms of both revenue recognition, aggressive in terms of both loss recognition. Jैसे many Indian entities, banks को बेटा Ind AS have not been made applicable yet, because once they apply Ind AS to banks, they will have to provide heavy amount of provision for doubtful debts. वहाँ पे भी accounting is aggressive. Right now we are applying provision for doubtful debts based on RBI norms. RBI will tell us that this is the amount of provision for doubtful debts to be created. उसके आगे अगर तुम्हारे को करना है तो कर लो और. But Ind AS बेटा it is expected credit losses बोल के एक method है. You will have to provide for all of those losses. If and banks do that, their reserves will reduce because of the losses that they're providing for. If their reserves reduce, better their capital will reduce. Net capital will reduce, which is not good. That is why we have postponed application of. We will have to apply, but at some point of time, we are just waiting for Indian banks to become more financially stronger. Balance sheet का अगर strength बढ़ गया, then we'll apply Ind AS. As of now, we did not apply Ind AS to banks, but then understand that Ind AS are aggressive in nature. To whom are Ind AS applicable? That is what is covered in our syllabus. We do not have to remember the list of Indian accounting standards. We do not have to worry about what is the accounting under Ind AS. Differences क्या है, ये क्या है, all of that beta you will learn in CA final. You do not have to worry about it now. Even if they ask a question in your interviews as such beta for articleship about Ind AS, the only answer that you should be telling them is that we do not have that covered in our syllabus in CA Inter. That is why we are not aware of it. We will ensure that we learn it in the process of articleship. Because anyways, you'll be learning FRS such beta, CA final ka financial reporting as a part of your CA final preparation. There you will learn about all the Ind AS. So applicability of Ind AS was done in a phased manner. First, we are talking about companies other than NBFCs, non-banking financial companies, banks, insurance entities. So for a company which is not an NBFC, which is not a bank, which is not an insurance company as such, but Ind AS got implemented in a phased manner. With effect from 1st April 2015, there was an option given for voluntary adoption. If you want to apply Ind AS, you do it. This is in respect of financial periods commencing on or after 1st April 2015. Uske pehle there was no voluntary adoption also. You cannot apply Ind AS. You will have to follow old accounting standards only. समझ में आ रहा है? This is voluntary adoption. In the entire India, I believe there were only two entities. One was JSW and the other some entity better that applied Ind AS on a voluntary basis. Everyone wanted to just wait and see whether what is the actual accounting under Ind AS. जब भी कुछ भी नया आता है बेटा, it's apparent that you might end up making mistakes in the application of that. Entities, big fours better were charging 11 lakhs to 20 lakh rupees only to tell companies what are all the areas that will get affected by Ind AS. Not to prepare their balance sheet as per Ind AS. We will first give you a presentation कि ये चीजें change हो सकती है. If you like it, then please pay another whatever lakhs as such better, and then we will convert your balance sheet as per Ind AS. So this is, guys, voluntary adoption. Mandatory application came for on or after 1st April 2016. But not every entity as such, guys. इसीलिए बेटा जो भी मैं financial statements मार को बताता हूँ, they will be for the accounting period 2015-16. देखे थे क्या तुम लोग ये? Because after this बेटा these entities are governed by Ind AS. And I cannot show you Ind AS financials because you will again not understand why is the disclosure different here and why are we learning different things in अपने accounting standards बोल के. So on or after 1st April 2016, it became mandatory for listed or unlisted entities whose net worth is 500 crores or more. Net worth is as per books of accounts. They are not making any reference to turnover. They are not making any reference to borrowing. They're making reference to net worth. Net worth, beta, the ones who are already done with group 2, you will know what is net worth as such, guys. Others, net worth is the net shareholders funds as per books of accounts. Equity share capital, preference share capital, all reserves and surplus. They will not ask all of this in the examination. I'm just telling you. Equity share capital, preference share capital beta, and reserves and surplus. Obviously, you should not include a reserve called as revaluation reserve. This is not to be included. All the other reserves should be included. If you do not know what are reserves and surplus or what does revaluation reserve stand for, do not worry. We will have all of those things covered later. अभी के लिए बेटा shareholders funds. तुम्हारा खुद का capital कितना है? Sole proprietor में capital देखते हो ना यार? That capital बेटा becomes net worth. Partnership में there are no reserves and surplus because we end up distributing all the profits to capital accounts. Don't we distribute the reserves better to capital accounts? So sum total of all the capital balances beta is called as your net worth. So if a company beta, whether it is listed or unlisted, whose net worth is 500 crores or more, for them it is mandatory as such beta to apply Ind AS from which financial year? For financial years commencing on or after 1st April 2016. Many Indian entities beta will have financial year commencing on 1st April only. We follow 1st April to 31st March. Only in respect of subsidiaries of MNCs beta, you will have the option of 31st December because they follow calendar year. One Indian entities beta will all follow 1st April to 31st March. Are we clear? Majority of the listed entities beta got covered at this point only because their net worth was more than 500 crores. They had to apply Ind AS. From 1st April 2017 now, all other listed entities, irrespective of net worth, are covered by Ind AS. Every listed entity. 1st April 2016, it was mandatory only for listed entities whose net worth was 500 crores or more. 1st April 2017, listed entities, irrespective of, doesn't matter what is the net worth of that listed entity, you should apply. Unlisted entities के लिए only if net worth is 250 crores or more. So if someone's net worth is 251 crores, for them it is mandatory to apply Ind AS from which year? 1st April 2017. If it's a listed entity, guys, even if your net worth is not more than 500 crores, you will have to apply Ind AS from 1st April 2017. So as of now, every listed entity, irrespective of the net worth, is governed by. Unlisted entities are governed by Ind AS if and only if net worth is 250 crores or more. There's someone standing outside. Unlisted entities are covered as such, guys, by this thing, guys, Ind AS, only if net worth is 250 crores or more. समझ में आ रहा है नहीं आ रहा है? यहाँ पे बेटा there was a small catch given. There are smaller entities that get listed on SME. कभी SME, अभी अपन SME बोल के सुन रहे ना. So listing में भी बेटा we have SME exchanges, small and medium exchange. Too volatile to not invest in those entities as such better, but there are few entities which gave a return of 1000% also in the last 1 year. But अभी वो सुने ना बेटा यामाहा का डीलर, some दिल्ली वाला डीलर who was listing himself on an SME, नहीं सुने वो भी न्यूज में, महान जान दो बेटा. But anyways, so entities that are listed on SME exchange are not to be considered as listed entities for this. मतलब they will continue to apply old accounting because these are very small entities बेटा, उनका net worth ही 10 करोड़ रहता. For them you cannot apply Ind AS, they will continue to apply old accounting standards. Are we clear? This is the applicability to companies other than banks, NBFCs and insurance companies. Is that clear? So Tata Motors, beta, the financial that I've shown you, they have applied Ind AS from the financial year 2016-17 because it was mandatory for them to apply Ind AS from 1st April 2016. Which criteria did they meet? The net worth was 500 crores or more. ITC applied it from the year 2016-17, guys, because their net worth was 500 crores or more. Reliance applied it from the year 2016-17 because their net worth was 500 crores or more. So all of these entities whose net worth is 500 crores or more started applying Ind AS as such beta from the year 2016-17. Other entities have applied Ind AS. Listed entities beta from the year 2017-18, guys. Unlisted entities have applied it only if their net worth is more than, यहाँ पे 250 crores और more है, exceeding नहीं है वो. So even if it is exactly 250 crores as such, guys, you meet that criteria. Are we crystal clear? इसके अलावा बेटा वो point तो रहेगा ही, holding subsidiary of the above. क्योंकि अगर group में एक जना Ind AS है, you have to present consolidated financial statements. Everyone else also will have to apply Ind AS. Otherwise, it is not possible to consolidate the financial statement. So you will always have that point beta, holding subsidiary of the above. Are we clear about this? Yes or no? समझ में आया नहीं आया? So are there entities still following old accounting standards? Which entities? Unlisted entities whose net worth is less than, and also listed entities whose securities are listed on a SME, small and medium exchange, guys. So smaller entities that are listed as such on an SME exchange are still governed by old accounting standards. They are not governed by. And guys, there might be 6 lakh, 7 lakh companies registered as such better in India. Not every company is a listed entity. कितने तो रहेंगे 3,000, 4,000, 5,000 listed entities, not more than that as such, guys. A majority of the companies as such, guys, that is why I said are still governed by old accounting standards. They are not governed by Ind AS. Are we clear about this? Yes or no, guys? As far as the applicability to NBFCs was concerned, you know what is an NBFC? Correct, beta Vittal. Full form is non-banking financial company. But what is an NBFC? Vittal. What is an NBFC? They give loans. And they take loans. Printing machine थोड़ी होंगी बेटा. होंगी क्या printing machine? लेना ही पड़ेगा. Yes, but anyone else, guys? What's an NBFC? Prajakta. No idea. पहले ही बोल दो no idea, खत्म नहीं. आकांक्षा, ये लोग सब नाम सुन रहे कौन कौन है बोल के. क्या तने? Anyone, guys, who knows what is an NBFC? I think I defined it in. No, it is registration with RBI is mandatory. Otherwise, you will not get an NBFC license. Excellent. Huh? Yes, beta. any company that does not have a banking license and whose primary business activity is of a financial nature. More than 50% of their assets should be of a financial nature. More than 50% of their income should be from a financial nature. Only then it will be classified as an NBFC. Okay. Example, housing loan companies. There are housing loan companies that are not a bank. LIC Housing is not a bank. But what is the business of LIC Housing? Give housing loans as such, guys. Is that of a financial nature? Almost 100% of their income beta comes only from a financial activity. So that will be an NBFC. If you are a stockbroker as such beta, are you an NBFC? Yes. Your primary business as such, guys, is of a financial nature. Financial nature does not mean only giving loans, guys. Financial nature beta can be dealing with stocks also. Even that is a financial asset only, no? So a stockbroker is also coming under the purview of, and ye alag baat hai beta, that they do not need a specific license from RBI because SEBI is governing them. वैसे ही बेटा LIC Housing does not need a specific license from RBI because we have National Housing Bank that takes care of the licenses to be given to housing finance companies. If you have a specific regulatory body, they will take care of the license. If you do not have a specific regulatory body, then you will come back to RBI. Muthoot Finance, NBFC, registered with RBI. Bajaj Housing, Bajaj Finance beta. Bajaj Finance का नाम तो सुने ना? That's an NBFC as such, guys, registered with RBI. Manappuram Finance, chit fund companies as such, guys, are also NBFCs. Chit fund companies are also of a financial nature, right? So all of that also beta will come under the purview of NBFCs. They do not have a banking license. एक ही problem, NBFC और banking का difference क्या है बेटा? Is NBFC does not have a banking license. You cannot have a bank account like a thing beta with an NBFC. They say you can have a savings account with a bank, you can have a current account with the bank. There can be continuous inflows and outflows of money. NBFC cannot be a part of that settlement process. You cannot open a bank account as such beta or an account with an NBFC and say I will deposit money today, I will withdraw tomorrow. समझ में आ रहा है नहीं आ रहा है? Are we clear about this? So as far as NBFCs are concerned, guys, the applicability to NBFCs as such, guys, there was no voluntary adoption. Option was not given कि चाहिए तो कर लो बोल के. No such option at all. It was mandatory as such, guys, made from 1st April 2018. This is for those NBFCs again which are listed or unlisted. Criteria is exactly same beta. Just that 1st April 2016 की जगह it became 1st April 2018. 1st April 2016 में क्या पढ़े थे? Listed or unlisted does not matter. Net worth should be 500 crores or more. Same thing here also. Whether it's a listed NBFC or an unlisted NBFC, we do not care. Net worth should be 500 crores or more. Are we clear about this? From 1st April 2019, beta, it was mandatory for those entities. Again, same as 1st April 2017. All other listed NBFCs and unlisted NBFCs only if net worth as such beta is 250 crores or more. समझ में आ रहा है नहीं आ रहा? Guys, forex dealers also comes under NBFC. Guys, ये जो automobile finance वाले रहते हैं, even they come under, because all of those are nothing but financial nature. Are we clear about the applicability part? As far as banking companies are concerned, guys, initially they said 1st April 2020, then they said 2019 बोले, फिर 20 बोले, फिर बोले indefinitely postponed till we make an announcement. Every year, next year बोलने से अच्छा, like, please leave it. We will let you know as and when they have to be made applicable. Again, the only reason why they are postponing is, I told you, once they apply it to banking companies as such, guys, provisions will increase and that can affect the capital balance. And do not forget, there are a lot of PSU banks, government owned banks as such beta. If the capital of these banks are reducing, who will have to infuse more capital? Government will have to infuse more capital. Like, let us wait till they become financially independent and then we will make all of these Ind AS applicable. Even for insurance entities as such beta, they say we have postponed it. We will tell you as and when it is to be made applicable. Are we clear about the app? So you should know, guys, now whether old accounting standard is applicable or an new accounting standard is applicable. What if there is an entity beta whose net worth is 5 crores? Unlisted entity as such beta. Old accounting standard or new accounting standard? But what if it's a subsidiary of a listed entity? याद रखना, guys. Tata Motors जैसी company as such, guys, or Reliance जैसी company, they may have 50 subsidiaries as such, guys. All of those subsidiaries will not have huge amount of capitals. They will have marginal amount of capitals as such, guys. In spite of that, everyone has to follow Ind AS only. They cannot follow old accounting standards. This is as far as the applicability is concerned, guys, of Indian accounting standards. Under Indian accounting standards, we have standards in relation to insurance, we have standards in relation to agriculture, जो अभी नहीं है. Old accounting standards में there's no standard that governs agricultural activity. There we have insurance, share capital related, borrowings related, all of that related. We have standards under Ind AS. Under the existing ones, we do not have it. Crystal clear, guys? Any doubt in this? Look at what I was highlighting. Ind AS. Ind AS in brackets Indian accounting standards. Ind AS बेटा in brackets Indian accounting standards. क्या doubt है बेटा? And need of the time. You need all the financial statements to be more based on time value component as such better rather than following the old standards. It makes more sense. Not just comparability as such better, even the times are changing, even the Indian economic environment has changed. It is not that it has been constant. So you will need the updated principles. So सिर्फ comparability is not the only reason as such guys why you keep having new standards. समझ में आ रहा नहीं आ रहा है? अब जैसे अकाउंटिंग स्टैंडर्ड 10 बेटा बहुत पुराना था, दे रिवाइज्ड इट इवन फॉर ओल्ड अंडर द ओल्ड अकाउंटिंग स्टैंडर्ड्स, दैट इज मोर और लेस सेम एज इंड AS. वहां पे हर जगह टाइम वैल्यू कंपोनेंट आता. इफ आई बाय एन एसेट फ्रॉम यू for 10 lakh rupees and the amount is payable to you after 2 years, it will tell me you cannot record the asset at 10 lakhs. It will tell me मेरे को मालूम है इसमें interest है. So record as if you have taken a loan from him, substance over legal form guys. So if the present value is 8 lakhs, I will record the asset at only 8 lakhs. I will disclose the balance 2 lakh rupees as interest expenditure. Won't that make more sense? Existing standard never addressed that issue. It was not there only. Once Ind AS is applicable, it is applicable for life. There's no going back. वही डाउट था ना. First year में net worth was more than 250 crores. फिर Tane became the CEO of the organization. Net worth reduced. Yes, but once Ind AS is applicable forever till that company is liquidated. Imagine that the net worth of an entity is only 1 crore rupees, but because you were a subsidiary of a listed entity, Ind AS was applicable to you. वो holding company बेटा तुम्हारे को abandon कर दिया. ठीक है? It's sold the subsidiary as such better. Now the net worth of the entity is still, because Ind AS was made applicable to it, Ind AS will now be applicable for life. There is no going back. यहाँ पे ऐसा नहीं है बेटा change between old and new. Once Ind AS is applicable for life. How do you ensure that you do not have to follow Ind AS? Liquidate that company, kill the company as such better, start a new company. Then you apply old accounting standards. Are we clear? Huh? Even if you don't. Voluntary, very good guys. Voluntary adoption भी अगर करे मस्ती में, that we wanted to apply Ind AS as such guys, even then there is no going back. Once you've applied, see guys, मतलब I know that this generation believes in backing out as such guys, but then यहाँ पे there is no option of backing out. Correct बेटा मानस? Nothing बेटा, you didn't do anything. But are we clear about this? लिखेंगे अभी. Any other doubts बेटा? Right on guys. Ind AS, Indian accounting standards. In order to ensure that the financial statements of Indian entities are comparable with financial statements of Indian entities are comparable with the global entities. Ind AS have been implemented in India. Ind AS have been implemented in India. Ind AS have been implemented in India. Implemented in India, which are in line with IFRS, which are in line with IFRS. which are in line with IFRS. Clear, guys? Now, when you talk about, guys, implementing Ind AS in India, I told you that we did not blindly copy. Okay, we have made certain changes as such, guys, to those standards also. Certain changes that have resulted in differences, certain changes that did not result in differences. Did not result in differences. Matlab, imagine IFRS giving two options, but we said that we do not want to give both the options. In Ind AS, we will want to give only one option. But even if you follow that one option, are you not complying with IFRS? समझ में आ रहा है ना क्या बोल रहा हूँ? IFRS बोल रहा है बेटा that you can follow option 1 or you can follow option 2. Ind AS बोल रहा है no option 2, only option 1. Even if I follow option 1, am I complying with IFRS? We are complying with IFRS. जैसे there's one IFRS के साथ बेटा one IFRS 1 उसका नाम ही वही है. वहाँ पे बेटा it says that when you're presenting P&L statement, you can either give classification on the basis of nature of expenditure or classification on the basis of activity. Matlab, you can show manufacturing expenditure, selling and distribution expenditure, administration expenditure, like that, or you show all salaries at one place, you show all depreciation at one place. Does not matter whether the employees of manufacturing department or admin department or selling and distribution department. Yes or no, guys? In AS mein beta, we said classification on the basis of activity is not allowed. Only classification on the basis of nature of expenditure, because Companies Act says that it is nature of expenditure. We wanted to comply with Companies Act also. So like that beta, there are differences. Or guys, there are differences wherein we totally went against IFRS. Abhi, this is, I'll give you a very simple example beta. Ever heard about the word acquisition? Imagine that there is a company whose net assets are 200 crores. You have acquired this company beta for 150 crores only. Somewhere in your foundation you have read if you pay more it is goodwill. If the purchase consideration is more than the net assets acquired, the excess consideration paid should be considered as goodwill. But what if you pay less? रटा मारे सो अच्छा है. हाँ. In IFRS बोलता है बेटा that this is your gain, transfer it to P&L account. Indian accounting standard said अगर ये option दे दिए ना, ये हर दूसरे दिन merger करते रहेंगे just to report profits. We will not give that option. We will still tell them transfer it to capital reserve. It cannot be transferred to P&L account. Are you getting the point? So this is the difference as such, guys, between IFRS and Ind AS. Are we not going against IFRS? समझ में आ रहा है नहीं आ रहा है? जैसे बेटा imagine that you have taken a building on rent. The rent is 10 lakh rupees in the first year, say 10.5 lakhs in the next year, 11 lakhs uska next year. Why are we increasing it by 5%? Inflation utna normal hai, and every rental in India beta will increase on account of inflation. ये option IFRS में, IFRS क्या बोलता है? If your rent is 10 lakhs in first year, 10.5 lakhs in second year, 11 lakhs in third year, you should book an expenditure of divided by 3. It says why is the rent increasing? ऐसा थोड़ी हो सकता है ना? It says you should spend an equal amount every year. Ind AS बोलता है sorry, there is inflation in India. We are a developing economy. It is very normal for us to have inflation of 5%, 6%. Rentals here in India increase on account of inflation. So if the increase in rent is on account of inflation, we will not want to do it on a straight line basis. We will book 10 lakhs in first year. We will book 10. See guys, whatever IFRS said also had a logic in it. Imagine that I know Krishna very well. I am taking a property on rent from him. I tell him I will pay 0 rupees in year 1. I will pay 0 rupees in year 2. I will pay 30 lakhs in year 3. I'm compensating him for the all 3 years, but I'm not paying him anything for year 1 year. Practically socho beta, if they do not include that statement, won't you end up booking 0 expenditure in first year, 0 expenditure in second year, and you'll directly book 30 lakhs in the third year? Isn't that incorrect? To avoid that, they say it should be done on a straight line basis. Though you are paying everything in the third year, please book an expenditure of 10 lakh rupees every year. Isn't that making sense? India में क्या बोलता है बेटा? Straight lining is not required if increase is on account of what developed economies? वो कभी inflation देखे ही नहीं. हाँ या ना guys? For them inflation will be 0.5%, 1%. So there will not be any increase in rent on account of inflation. That is why they did not include that point, but we included. Are we supposed to remember all of that? No. We are not supposed to remember all of this, guys. This is just to tell you that there are differences between IFRS and Ind AS. Are we clear about this? Yes or no? Few differences as such, guys, are where it is not resulting, isko carve out bolte hai such, guys. When you say differences not resulting in carve out, it basically means they gave multiple options, but we included lesser number of options. So this is the difference, but it is not resulting in any carve out. It is not deviating from IFRS. समझ में आ रहा है नहीं आ रहा है? Differences that result in carve out, मतलब they provided something else, we are providing something else only. Because of this, we are deviating from IFRS. Differences that result in carve out, differences that do not result in carve out. What are differences that result in carve out? ये theory में पूछ सकता है बेटा. Definition, carve out मतलब क्या बोल के? When I say carve out is साथ बेटा, differences that result in carve out, इसका मतलब क्या है? If you apply this, you are not complying with IFRS. That is differences that result in carve out. You are deviating from IFRS. Differences that do not result in carve out, matlab, even if this is the difference between IFRS and Ind AS, complying with this is still complying with IFRS. When will that come? Only if lesser number of options are given under Ind AS. Are we clear about this? Yes or no, beta? Then there is something called as carve-in. ये समझ में आ गया अभी दोनों पॉइंट? फर्स्ट वाले का एग्जाम्पल क्या था? Not resulting in carve out. What was the example? Option of P&L statement. I said you can either present it on the basis of functional classification or on the basis of nature. नहीं लिखना है वो भी एग्जाम में. You just have to tell them what is the meaning of the word carve out not resulting in a difference. Difference is not resulting in a carve out. Difference is resulting in a carve out. ठीक है? Carve in का मतलब होता है बेटा wherein you are giving some additional disclosure requirement or guidance under Ind AS that is not required under. I am still complying. I am only providing more information. I am not changing accounting treatment. I am only giving additional disclosure under notes to accounts. वो बोल रहा है कि give a list of shareholders who hold more than 5%. मैं बोल रहा हूँ उसके अलावा I will also give more than between 2 to 5%. So am I not still complying with IFRS? I am only giving additional disclosures. Giving additional disclosures, beta, I have no problem. Problem arises only when you disclose lesser data to your investors. If you are giving more data, beta, there's absolutely no issue with that. That is called as carve-in. Understood the words? Yes or no बेटा? कभी कभी the theory में पूछता है बेटा. Ind AS applicability नहीं पूछा आज तक कभी, but फिर भी because it is included, you have to do it. I have to do it. Carve out बेटा, yes, I have seen this word couple of times in RTPs, couple of times in MTPs, so you should know what is the meaning of the word carve out. Any doubt in this? Understood? लिखो बेटा. Next line. India did not adopt IFRS. India did not adopt IFRS. Meaning there are certain differences. Meaning there are certain differences between IFRS and Ind AS. Certain differences between IFRS and Ind AS. उसके नीचे first point. Differences resulting in carve out. Differences resulting in carve out. Differences resulting in carve out. If the accounting treatment under Ind AS differs from IFRS, it is considered as a difference resulting in carve out. It is considered as a difference resulting in carve out. It is considered as a difference resulting in carve out. Difference resulting in carve out. Example. Net assets acquired 200 crores. Purchase consideration 150 crores. दोनों का difference is, we have a separate chapter beta for amalgamation. We'll do that there also, don't worry. I'll tell you what is goodwill, capital reserve in detail there. अभी के लिए बस इतना समझो. So difference 50 crores बेटा. IFRS क्या बोलता है? मतलब for them this is realized profit. तुम कमा लिए already 50 बोल के. Ind AS क्या बोलता है? This is not realized profit. That is why we'll transfer it to capital reserve. IFRS says that you can transfer this to P&L account. Ind AS says that you'll have to transfer this to capital reserve. Are we clear, guys? ये समझ में आएगा सबको? Next बेटा, second point, differences not resulting in carve out. Differences not resulting in carve out. First point was differences resulting in carve out. Second point is differences not resulting in carve out. If there are multiple options given under Ind AS, sorry, if there are multiple options given under IFRS, multiple options given under IFRS, and lesser options given under Ind AS, lesser options given under Ind AS, and lesser options given under Ind AS, the financial statements will still be in compliance with, financial statements will still be in compliance with, financial statements will still be in compliance with IFRS. Financial statements will still be in compliance with IFRS. Example, IFRS P&L statement can be what beta? Functional classification or based on nature of expenditure. Ind AS, guys, only based on nature of expenditure. Ind AS only based on nature of expenditure. दिख रहा है निधि? Only based on nature of expenditure. You have a doubt, Krishna? You started smiling, that's why. Only based on nature of expenditure. Third point beta, क्या? Carve in. What are carve in? Additional disclosures required under Ind AS. Carve in बोल के लिखो बेटा. These are the additional disclosures required under Ind AS. Additional disclosures required under Ind AS. Required under Ind AS. ठीक है? Now guys, applicability. इसमें first heading बेटा is for companies other than NBFCs, banks, insurance entities. First heading beta is for companies other than banks, NBFCs, insurance entities. क्या बोला था बेटा मैं? फाइनेंशियल पीरियड्स commencing on or after, इसमें फर्स्ट पॉइंट बेटा 1 अप्रैल 2015, 15 से बेटा it was voluntary adoption. Any company if they want they can apply Ind AS. Voluntary adoption guys is 1 April 2015. First April 2016. Mandatory for whom guys? Listed or unlisted? Listed or unlisted companies whose net worth is 500 crores or more. Whose net worth is 500 crores or more. इसके अलावा बेटा that point will always be there. What is that? Holding subsidiaries of the above. Holding subsidiaries of the above. Next guys, 1st April 2017. Mandatory for all other listed entities except those listed on SME exchange, except those listed on SME exchange क्या कर रही है आंचल? Unlisted entities only if net worth is 250 crores or more. 250 crores or more. The last point beta again, holding subsidiaries of the above. Holding subsidiaries of the above. Don't worry regarding net worth का definition बेटा, we'll come across that later also. अभी के लिए अगर लिखना है तो बस क्या रहेगा? net worth is equity share capital, preference share capital, reserves and surplus, unrealized profits बेटा. Basically revaluation reserve should not be included. Revaluation reserve not to be included. Minus accumulated losses if any. You will see better that the wording is share premium and not securities premium. वो सब अभी के लिए जरूरत नहीं है. जैसे if you have premium on issue of debentures, it cannot be included. But if you have premium on issue of shares, it will be included. Reserves में they are only including share premium, they are not including securities premium. अभी के लिए नहीं, बाद में. हो गया बेटा ये? Yes or no guys? Next beta, second category for NBFCs. For NBFCs guys, is there any voluntary adoption? No voluntary adoption. ये नहीं हुआ. Net worth is equity share capital plus preference share capital plus reserves and surplus minus accumulated losses. For NBFCs beta, no voluntary adoption. On or after 1st April 2018, listed or unlisted NBFCs with net worth of 500 crores or more with net worth of 500 crores or more, holding subsidiary of the above, on or after 1st April 2019. This is for all other listed NBFCs. Unlisted NBFCs only if net worth is 250 crores or more. Holding subsidiary of the above. Unlisted NBFCs only if the net worth is 250 crores or more, holding subsidiary of the above entities. Are we all clear about this? Yes or no, guys? Next, what did I tell you for banks and insurance entities? Ind AS implementation has been deferred. वो लिखो बेटा, next note. Are you all done with this? Yes, beta. If you're all done with this, beta, write down. Next. For banks and insurance entities. For banks and insurance entities. For banks and insurance entities. Ind AS implementation has been for banks and insurance entities. Ind AS implementation has been deferred. Ind AS implementation has been deferred. Okay? This is about the implementation as such, guys, of Ind AS. Any doubt in this part? Yes or no, guys? Oh, we would have to start standards. Should I start off with accounting standards also? No, sir. So you do not have a class tomorrow. Do not forget that, guys. Someone asked me, sir, do we have a holiday on every Saturday? No, guys. You do not have a holiday on every Saturday. You will have classes for 6 days a week as such, guys. If required, towards the end, we may take class on Sunday also if required. But usually that does not happen as such, beta. Okay? Last time we required रहते वो रह गया. It was not required only. But anyways, guys, enjoy your weekend as such, guys, while you can. So I'll see you guys directly on Monday. Do not forget, Monday the class starts at 7 a.m. You most likely will have all the 3 subjects, guys, or 2 subjects. I will let you know, guys. If there are only 2 subjects, then for another 1-2 days, you might leave a little early, not till 4:30. You might leave by 3 o'clock. That's for another 1 or 2 days. That's it. All right. Chalo beta. See you guys on Monday. Bye-bye. Signing off for the day, guys. Online students, end of the session. See you guys on Monday. Bye-bye.